Did you know you can get a copy of the Edge Finder completely free with our sponsor, 8cap? 8cap is a super well-known brokerage that has been in the game of CFDs for a long time. And if you are interested in switching your brokerage to 8cap, they can actually purchase a copy of Edge Finder on your behalf, making it completely free for you. This is an offer our team has worked out to make the Edge Finder a completely free to access tool if you move over your account to 8cap. Here's how this works. It's pretty straightforward. If you head over to our website, a1trading.com/8cap, you can explore this offer in more details, including all the terms and conditions. But basically, the high level idea is if you create an account through that specific page and you meet the deposit requirements, 8cap will effectively buy a copy of Edge Finder for you. Now, please note this is unavailable to US traders, but for my friends outside the United States who trade CFDs and you like the brokerage 8cap after exploring it on this page that is linked below, then maybe you consider taking advantage of this offer. We've had a lot of people do this and it makes the Edge Finder completely free, which is a hard price to beat, by the way. It doesn't get much better than free. And it's a win-win-win. 8cap gets a new client, you get a great brokerage, as well as access to our software, as well as other stuff on that page. You can get access to free memberships with us, Stockbox, etc. at no cost to you. You just move over your trading to 8cap. So the full details and terms and conditions can be found on this landing page, again, linked in the live stream chat or in the description down below. Please also make sure to do your due diligence to make sure that 8cap is a good fit for your trading and meets all your criteria for what you're looking for in a brokerage. On this landing page, you can explore the different product offerings that you get access to from our store completely free if you deposit certain tiers within this list. And the cool thing about this multifaceted offer is that even if you have a lower capital basis, why not move your account over if you like the brokerage, you like what you see there, and get something for free out of it. I think this is a really cool offer that they've set up with us, and it is sort of a co-branded offer by 8cap sponsoring A1 Trading. So check them out. Again, all the information can be found on that landing page, a1trading.com/8cap, or found in the description or live stream chat below. Thanks to 8cap for sponsoring. Now back to the stream.
Good morning, everybody. Welcome back to another live stream. Hope you're all doing well. We've got dollar index pressing back up against, once again, this resistance zone that we've been watching we've been watching paint dry here with the dollar index at this level for a while. But it looks like it is yet again attempting to make a breakaway move up to that 100.4 level we've been watching for on the DXY. Now, of course, this would impact a lot of different charts, whether you trade gold, whether you trade currency pairs, etc. So we are keeping a close eye on the dollar index, especially this morning, given that we have the PCE number coming out in just 10 minutes. Now, what does this number mean to the dollar and to the broader market? Well, let's just take a look. Let's refresh on our inflation circumstance right now. If we go to inflation data and just take a bird's eye view, what we can see is the consumer price index has been trending higher. At the same time, we have had the producer price index trending higher and actually jolted higher here recently. And then if we take a look at PCE, we have also seen this thing trending just slightly higher. But the question becomes today, are we going to get some kind of jump alongside the CPI and PPI in the PCE reading? Now, I know these are a bunch of acronyms, but think of it in the simple terms as this is just another measurement of inflation, and it happens to be one that the Federal Reserve really cares about. This is personal consumption expenditures, and it matters because it's a real close tap in on what the consumer's prices are feeling like. And so if, we are seeing something like the PCE number jump today, it would be a concerning thing in a couple of different ways. What would it do, for example, to interest rates? That's where we start. Well, if you get, for example, a shock to the upside in inflation, starting to ripple through the system, it could lead yields to making much larger moves higher. They've already been trending higher, but you could continue to see that trend play out. Now, that puts bearish pressure on things like stocks, and it puts bearish pressure on things like gold, and it puts bearish pressure on things like Bitcoin. By the way, I don't know if you guys are watching gold here this morning, but take a look. Gold continuing its fallout here We've broken that support zone that we've been watching, this 45.20 level, and maybe the big psychological 4,500 level. Being broken here has led to, yet again, another flush to the downside today. Gold is down another 1.5%. And just take a look at silver as well. Silver is now threatening the bottom end of this range that we've been watching. Yesterday, we talked about this 4-hour chart being broken or potentially being broken. Here it goes. We had the big fallout through the overnight session, and now we are looking at a situation where how does price respond at this time, not as support, but as potential resistance? Do we see sellers come in and continue the push lower in precious metals? Precious metals have a lot of momentum to the downside right now. For a change, right? We had a huge, massive upside momentum for months on end going into 2026, and now 2026 has turned into decidedly more of a bearish year now for gold. I mean, you have to remember, we are actually very negative on the year so far, especially when you consider like the Nasdaq, for example. Nasdaq basically, right, is up like what, 18% or something crazy from the lows, 20% more so from the March lows. But take a look at gold, and you can see from the lows here, you are still technically up about 6.6%. But from the beginning of the year, you've really had pretty much all of the gains wiped away. So I guess we're not necessarily negative. It just feels that we're very negative because we've had essentially a price crash from the highs of down 22% up until this point. Now, granted, it was worse when we had the March lows. Gold was down almost 27%. That is no joke. That is a serious sell-off in precious metals. And it kind of is like the air getting popped out of the balloon because we had so much hype around precious metals into the new year. And we've really seen this thing turn for the worst. Good to see you guys in the chat. Good morning to you. Good afternoon, wherever you are in the world. Looking for NVIDIA longs. Ray Beast says, very interesting. NVIDIA longs are kind of an interesting one. Nasdaq here, I think, has some room. I've been pointing out, I think that the Nasdaq has room to pull back. But I don't mind the idea. I like NVIDIA shares as well. I just don't know that, for me personally, not financial advice, you do whatever you want. But I think that broader terms, stocks have room to pull back, which could mean NVIDIA down, 10, 15, 20% would be completely in the realm of normalcy, just because that's a more volatile stock. Carries a higher beta to the broader market most of the time. Anyways, so what I'm watching for today, PCE numbers coming out in 8 minutes. If you get PCE, let's understand something. So let's just cover this for the macro traders in the room. PCE is a measurement of inflation. If inflation versus expectations, let's say PCE expectations, right? This is what we're analyzing today. If you get a scenario where the number, the actual comes in higher than these expectations, that would lead to dollar strength, gold weakness, probably stock weakness as well. If you get the actual number today coming in lower than expected, that would be bearish for the dollar, and it would be positive for stocks and gold. Does that make sense? Why does that make sense? Because sometimes people get confused on that concept. They say, wait, what? Inflation going up is bad for gold? Yes. And it makes sense when you think of it in like terms of like M2 money supply. When we're looking at the M2 money supply, an expansion in money supply drastically has already happened. That is looking at inflation that has already sort of happened. The Fed looks at that and says, okay, going forward, we might need to tighten the hatches down, meaning less money printing, right? So people sometimes get it confused. Inflation itself happening is in the past good for gold. Like if it's already happened and a bunch of fiat currency has been printed, yeah, that should have supported gold up to this point. But looking forward, now that we know inflation is in the system, to get rid of it, the Fed's going to have to keep those interest rates higher. And that means slowing the money printing system, which is bad for gold, right? So inflation materializing is in actuality oftentimes a negative catalyst for gold, because then the precious metals world says, oh, wait a second, the Fed's not going to cut rates. The Fed's going to keep rates high. And higher interest rates are directly negative to gold for a number of reasons. First of all, again, less money printing. But number two, higher interest rates are a competition to gold. People might say, well, why would I buy gold, which yields nothing, right? It just yields nothing. In fact, if you've been holding gold, it's been yielding minus 20% from the highs, right? So a lot of people are like fed up with this. And then you get bonds that are offering something, right? Bonds are offering, well, take a look. I mean, here's your bidding right now. Like you go take a look at like a 10-year bond. You buy a 10-year bond right now, you get 4.5%. And now that's not a lot. I get that. But think about for people who are in retirement, people who are holding on to or managing massive billions of dollars worth of portfolio funds, they might say, hey, stocks are going crazy right now. Gold is doing a whole lot of nothing. It just is trending down. Maybe I just buy some bonds and chill and collect 4.5% tax advantaged. You see what I'm saying? That is a competitor to gold because gold and bonds, we say it often on the channel, gold and bonds are competitors. When yields move higher, when the offering on bonds starts to get juicier, people say, I'm going to pick bonds over gold because bonds are going to offer me something and gold is going to lose me money right now, right? Or that's the theory, right? I'm not saying it will because gold could turn around, start moving higher, but hopefully that makes sense. If that does make sense, can you guys do me a quick favor? For those of you who are here with me live, give me a 1 in the chat if that concept makes sense. Understanding that bonds are a competitor to gold because they offer yield and it's a similar cohort of investor. People who buy bonds oftentimes are the same types of people who would buy gold. They're buying gold or bonds as a way to hedge away from just standard stocks. And even though, we're maybe more on the trading side, we have to understand the thinking of passive investors. We have to think where big money might be moving in and out of things to capitalize on shorter term trades or investments ourselves, right? We have to be thinking that way. Bonds are the most important asset to look at. I would 100% agree. They are the most important thing. They are the money printer being turned on or turned off. Nick, do you think more investors are moving towards rare earths than bonds? I guess if you mean like all sorts of rare earths, not just gold and silver, right now I would say they're moving away from them, right? Gold, silver, these things are no longer the popular crowd. The popular crowd chased gold and silver when it was running hot. Everyone wanted in over here. People are interesting where they will just, look at gold and silver now and they'll say, this is terrible. I don't want this. Now, granted, do I think longer term there might be an opportunity to dollar cost average into some precious metals? Personally, I think so. Not financial advice, just sharing my thoughts. Longer term, yeah, I think gold and silver are places that I like, for the longer term. But in the short term, I think they trend lower. Like I have short term a bearish bias, long term a bullish bias, kind of always. Anyways, Nick, do you think the markets will focus on PCE or the ongoing situation in the Middle East? Both. 100% both. Duranto, good to see you, my friend. Thanks for being here. Guys, we've got just a few minutes to go here before the PCE number drops this morning. It will potentially be market moving, depending on how surprising it is to the market. Remember, markets move off of surprises. If the PCE number comes in is exactly as expected this morning, then you're probably not going to get a big move. But what we've got on the screen right now is I've got all of our different charts. We've got S&P, Nasdaq, gold, silver, oil, dollar, Bitcoin, and the Dow Jones all on your screen so that we can watch the reaction. But don't go anywhere. A lot of times people leave right after the drop. Don't go anywhere because that's when things actually get good. We can actually analyze what the PCE number tells us about where things may be trending next. Nick, what do you think about corporate bonds? I'm not a big bond investor, to be honest, but I do like trading stuff. And I am currently short bonds personally. Now, longer term, I still don't love bonds. At 4.5%, I feel like inflation is going to be structurally higher for a long time. So my opinion is I'm still bearish bonds. Like I think bonds, if you start getting up into the 5.5%, it starts to become more attractive. I might actually allocate some passive money to sit in bonds if I saw 5.5%. But right now, I don't love it. I think inflation's going to stay high for a while, especially with gas prices and just, the national debts globally. Guys, we've got 20 seconds to go here until we get the PCE number. I'll react here with you guys live. If you could, do me a favor, hit the thumbs up button on the stream, subscribe if you are new, and let's get into this, see what we've got going on. Number should be dropping any second now. All right. No big price reaction just yet. Dollar index is moving a little bit lower here now. Stocks are slightly higher. Silver, gold also just slightly uptick. So let's take a look at what that number is. So we have got the core PCE coming in higher than expected. Came in as expected. Let's take a look at headline. Where am I looking? Personal consumption expenditure year over year, 3.8% versus 3.8% expected. Okay, so it came in as expected. We can actually go itemized here. So jobless claims also, by the way, did come in a little bit higher than expected. So that is a little bit of softness in the jobs data, not crazy, but a little bit of softness there. The PCE number here came in month over month, slightly lower than expected, but year over year came in line with expectations. Personal consumption expenditure prices came in line with expectations. Core PCE came in quarter over quarter at 4.4% versus 4.3%, but year over year, which is the one that matters, came in line with expectations. So basically, we had PCE come in just in line with expectations, and hence why we're not really seeing a big market reaction. So as I just mentioned, when it comes to these data points, right, what gets the market to move is a surprise, a shock factor, something of, merit in the sense that the markets get surprised. So we came in with a number this morning that met expectations on the dot. So someone asked, the question, is the market going to focus on PCE or the Middle East? And I responded with both, because right now, look, the answer is PCE numbers do matter. Inflation does matter, largely because it is a reflection and a reaction to what's been going on in the Middle East. At the end of the day, why do we care about the Middle East? Why do we? I mean, obviously, from a geopolitics, human conflict perspective, that obviously matters. But from a markets perspective, why do we care about the Middle East? Because inflation is the concern. If supply disruptions continue to take place, the question is, how soon and how aggressively does that start to impact the inflation story, which could derail all sorts of different stuff that we had thought and planned for in 2026. Rate cuts, et cetera, have been thrown out of the book. I mean, guys, 6 months ago, we were like prepping for rate cuts. And now we've got yields stubbornly staying higher. So yeah, very, very interesting stuff. By the way, guys, we are covering all of this regularly in our Telegram channel. It's free to join. If you want to scan the QR code that is below my camera right here, you can join us in there. We are publishing multiple times per week updates, both geopolitically, fundamentally, technically, and free trade ideas are being dropped in the Telegram channel. It is free to join. So if you have Telegram, scan the QR code or click the link that's just been dropped in the live stream chat to join us on that conversation. Okay, part of the conversation is going to expand now because we're bringing in my good friend Chris Pulver to take a look at what is going on in today's markets. Hey, Chris, how's it going, man?
What up, Nick? How are you, man?
Pretty good. It's been a week or two since I've talked to you, so I'm curious to see what you're thinking and what you're looking at.
Same old. No, actually, I was curious how it was going to print today. It's an interesting read to get the monthly 1/10 lower and the core PCE yearly 1/10 higher as expected. That's probably perfect as far as like how to distribute this data without a huge shock like we saw in PPI and CPI. The one thing I'm probably looking at the most right now is the 8-week bullish run in a row, this being 9th week. If we have a gap fill by today, tomorrow's price action, the crazy part here, Nick, is we could still drop to 7,473 and still be considered a positive week from last week's close. So I think that's going to be an interesting wrinkle to see, how do we finish out this month, which this the month ends tomorrow as far as trading goes. So are we going to have today be a nothing burger, tomorrow be a nothing burger? It's 9 bullish weeks in a row. We go into June. Actually, one thing, do you have this handy? Can you go to like the seasonality, like the 10-year seasonality of the S&P? Do we have any lull in the summertime, or is it like lower? I don't think we have like a pullback in the summer necessarily. I just think we're we're due for a pullback at like 8-9 weeks in a row. I think we at least have a pause.
Yeah, I've got it pulled up here on my side.
Okay.
So what we have seen so far this year has been seasonality to a T, to a certain degree, right? We've had this start, and then we had the big, kind of seasonally expected, like we came right in with expectations in regards to a drop in February, March, and into April. I mean, following suit almost perfectly with last year's price. I mean, this was a repeat of last year.
Yeah.
And then, yeah, that concept of sell in May and go away. Unfortunately, for us, I don't know your exact positioning, but for me personally, I would like some discounts, some pullbacks. But right now, seasonality still seems to, at least in the last 10 years, the summer months have been positive. Has been a little bit of lull here, so maybe we'll get some, maybe we'll get a little bit of sideways chop or pullback here. That would be perfectly fine with me. But yeah, the summer months, the sell in May and go away strategy in the last 10 years has not been a super powerful one.
Yeah, that's that. I mean, it's fair because a lot of the thrust has come from like the April turnaround or the May turnarounds, and like April, May, it just kind of pushes us and drifts into the summer where it really isn't derailed. Yeah, I think the summer months might just get us into like what happens in August and September, because the entire continent of Europe goes on vacation in August, and September is always like the pullback and September effect and tax loss harvesting. So maybe that's the next pullback. But the one thing that is in the back of my mind, and probably is on the front of every trader's mind, is when SpaceX IPO goes live here in the next maybe 30 to 45 days. I feel like this market is trying to do everything in its power to just keep pumping. Yeah. Don't pull back. Don't derail this, $1 trillion IPO. Don't derail all this excitement with some of the, I mean, really, I think it's between Anthropic, OpenAI, SpaceX, 3 of the largest IPOs ever, and they're all coming in like the next 60 to 90 days. And not only that, but they're not only coming live, but I mean, they could be in the Nasdaq within like a week or two of IPO, which has never ever happened. So it's really, really crazy how it's almost like they're rewriting the rules to make exceptions for these big IPOs and these huge companies coming to market and doing hundreds of billions of dollars of raises.
Yeah, no, it is. It's crazy to see just how much this market can just kind of keep with the narrative, the AI hype. I mean, it is real. The semiconductor ETF almost every day is higher, and it certainly feels. You look at this, it's like I can't even. I'm getting to the point, Chris. I don't know if you're at this point, but I get to the point where I'm like shocked if I see any red. Like a pullback nowadays is a flat day. Like a flat day is a pullback nowadays. It feels like. And at some point, I'm saying that jokingly, because at some point it will have pullbacks. It always does. You always have sharp corrections, especially when you have things that run up so hot. The question is, obviously, as always, is that 20% higher than we pull back, or is that right now? And so for me, when I look at the NAS, the SMH, we've been here before. It's like all you can do is wait patiently, because at the end of the day, we were kind of saying that going into this area, and then we really did. We had a correction in both time and in price. You got a pretty good what is this, from peak to trough? That was 152 days, a 13% drop in the Nasdaq from those highs. And so when you see these sorts of price action moves, it can be kind of nauseating. You're like, man, this thing just never gives us anything but new, fresh, all-time highs. And then someday you wake up and there you go. You've got 150 days gone by. It's gone sideways to down. So I think being ready, being nimble, and not giving in to impatience is really important here.
Agree. Man, I built out a trade yesterday that I'm tempted to take, just thinking like this market has to have at least a reality check. But the funny part is that reality check, Nick, might be like 1 week the market's down 2-3%, and then the next 3-4 weeks it's back up to all-time highs with some additional thrust. So I built this trade out, and this is using just the option chain going out to the end of June. And I would be parking this profit trap around a like 25 to 20 delta, which is right around that. Like it's just outside the expected move. We're not in a high IV environment, by the way. So, I mean, to have the VIX around like mid 16s is considered pretty low at this point, since we were in the 20s and 30s most of the year with that dispersion trade. But even this, it's like, as I continue to kind of warn, it's like the upside risk in this market is very real. I think the pain trade is still very real. AAII, I'm curious what the sentiment was, because last week it was 43%. Even this 41.9%. Sentiment readings continue to be so far off. People are way too bearish. What we are definitely seeing right now is a disconnect between the real economy and the stock market. I think that I don't know if you caught this segment last week, but I think Kathy Wood, it was either last week or the week before, her In the Know segment that she usually does around non-farm payroll. She had mentioned that one of the very common recession indicators is when PPI, core PPI, is trending higher and actually crosses over the core CPI. So if PPI is popping higher than CPI, and this is core, by the way, which is excluding food and energy, that has been historically like 30 years of there's a recession, either coming soon or we're in one. And so her takeaway is that this has been the rolling recession that we've been experiencing since 2022. This has been the consumer finally saying like, hey, look, at some point the consumer is going to say no. But the issue is the K-shaped allows the wealthier consumers to still keep spending to the upside while the bottom is struggling with this affordability crisis. But this is the background kind of Main Street recession that's rolling in the background while we're still getting this big boom and just trying to get a handle on the Middle East. I mentioned this to you last week, but I'll bring this up. The one thing that's a really crazy backdrop for me with everything trading is inflation is higher everywhere, and it's sticky. And you're looking at every central bank planning on raising by the end of the year. Like, that shouldn't seem like a big boom for risk appetite. With all of a sudden there's going to be tightening from the central banks. So Nick, are they learning from the 2020, 2021 window of trying to raise and get ahead of not letting inflation run too hot? Or is this going to be like what ultimately is monetary policies getting in the way of this big boom, and therefore we're gonna choke off some of the upside and some of the growth sooner than later? What do you think?
Well, it'll be interesting to me because I still, Chris, to follow up, I haven't spoken to you in a while. I actually re-entered the short bonds idea that I had.
Okay.
So I'm back and thinking yields could move higher. So that kind of answers your concept of, I think central banks are, I do think that they're the trend of central banks. It's a slow moving one, but it's trending towards more hawkishness. It's trending more towards, we got to deal with this inflation problem. And just to pull up, you mentioned the K-shaped economy stuff. This is RSPD. It's an ETF that tracks discretionary stocks, but it's equally weighted, because when you look at XLY, as you probably already know this, but it's heavily weighted towards like Amazon, which has been on a monster tear, right? It's been one of the winners. So I bring this up, this RSPD, it's discretionary stocks. So for viewers who don't know what that means, discretionary stocks are going to be things that people don't necessarily need to buy. So I always think of like Nike, buying a Tesla, shopping for fun, basically. In 2021, people were going crazy buying shoes and watches, and all that stuff blew up, right? People buying luxury and for fun items. It's a good indicator of the economy, because what we can see here is that this ETF is still very much not back at all-time highs, right? So you have the Nasdaq, the S&P at all-time highs. This thing's still down 8.5% as a collective group from the highs. That tells you that people are not, the average consumer is not out there like doing fantastic. The average consumer, I mean, we also know this from consumer confidence. Like if we take a look at our, I think we put this under economic data, economic growth, consumer confidence. Consumer confidence has been consistently low for a while. And I don't know if our data goes this far back, but I do happen to know that the readings that we are currently in, how far back does this go? This might actually do it. 15, how long is it? 2020? 20 years ago? Do we have that far? No, we don't. I was going to try and get it to 2008 levels. But anyways, I happen to know that this is very close, hovering around 2008 levels of consumer sentiment. It has been trending down since the post-pandemic era. We have been living in higher inflation, a slowing jobs market. We are just in an environment where people don't nearly feel as good as the stock market might suggest, because there's just so much top heavy winning going on in the stock market in regards to the semiconductors and mega cap tech stocks. And so is that a bad thing? Does that mean that the market must crumble? Clearly not, because it's done so for a while. But I do think, Chris, that we're not crazy for thinking at some point this is going to start to cost the economy something. Like if you have slow hiring, consumer sentiment continuing to move lower, at some point it hurts, right? And maybe the trigger is, I don't know if this is going to happen or not, but maybe the trigger is, if this situation in the Middle East is not over and we see another round of oil staying high, or at least just staying in this area for another 3 months. We've been sitting here at oil for like 90 days. And we talked about it when it happened. It's not just the spike, it's the duration. And I think that we've had high oil prices and stayed there for a while. So yeah, I am concerned about inflation blowing out, central banks needing to maybe hike interest rates or keep them steady for a while. And I think that it is a macro challenging dynamic for a little while.
Yeah, it's look, I mean, we've seen the markets climb the wall of worry, year after year since COVID, even through 2022. That was a little bit more sustained with a 9 or 10 month drawdown, but it still had its reflexive rallies. But we made lower highs, lower lows, and then we came out of that with, I mean, 3 of the most aggressive bull markets. I mean, 2023 was over 20%, 2024 over 20%, 2025 was at 18%. Throw a dividend on top of that, it's 20%. Right now, year to date is what for SPX? I think we're in the 8, 9, 10% year to date. Year to date is 9.34. Nasdaq has crossed double digits, so NDX is up. Geez, oh Pete's dude, 17.4 year to date on Nasdaq. I mean, some of the high flying stocks, we saw the quantum computing boost from the government. Okay, IBM got a huge bid, and it's up $5 again. I mean, this is a huge rip from these equal lows around the 220 handle. You're looking at Dell ripping to all-time highs and also having another, $14 gap to the upside. You're getting Micron, a small little Ohio semiconductor company that is now worth over $1 trillion, number 12 in the world as far as market cap because of this price appreciation. It's bonkers, man. And the crazy part is, like, this is a chart that I can't justify buying at this price and this trajectory, but it's like, I also could show us like, hey man, this might go to, $1,200 or $1,500 before we get a 50% pullback. So I don't know what to really do here outside of try to be patient. Part of me was like, well, should I just do like a poor man's covered call and like buy deep in the money call and just sell against it and try to generate some income? I feel like at this point, it's like all it takes is one flinch in these, this sector, because now AI is now, I think it's 14, 15% of the entire stock market now with this rally. I will say this. You mentioned the oil stuff with the sustained oil, chop, and maybe it's, higher than 80, but we kind of watch that $100 mark as like, okay, it's going to be pressure in equities if we get above $100. But if it's 80, like the market somehow absorbs it. I also think that one thing we haven't seen yet, we haven't really seen rolling blackouts. We haven't really seen bottlenecks as far as, hey, we can't build our infrastructure as quickly as the demand is coming in. And if that bottleneck in some way reflects anywhere in the markets, like reflects like we have a huge drop in this because of, I don't know, people stop buying it, or I don't think the CapEx spending stops yet. I think that's maybe the bigger picture sign of like a top or maybe correction is when the CapEx is all out there. We've got these huge IPOs and we have trillions of dollars that have been spent for this AI build out. And then it turns out to be, it's not as cool and awesome as everyone thinks it is. We're trying to explore in space, but it's like 10 times the price. I mean, look at the space, like space exploration type stocks. Mm-hmm. They are getting like 75 to 100 times sales. Yeah, like these are crazy. Like the .com type bubbly, euphoric readings.
I think space stocks, I'm scarred by them because I remember, I mean, I never traded them, but I just remember watching live streams, videos, everybody talking about space stocks in 2021, like right there at the top.
Yeah.
And it was like so exciting. Oh my gosh, we're going to space. This is, and Chris, I mean, I just feel like, when we look at semiconductors, this is the next test, right? We saw this with precious metals in January. We watched this thing in the precious metals world. guys, like the exact same feeling. If you're watching semiconductors like Chris and I, and you're looking at it and being like, gosh, dang it, man, this thing just does not quit. That's exactly how gold felt in January of 2026. Now, obviously, it also felt like that over here. It kept going for a while, right? Like rationally, it can keep doing what it's doing. There is no, and I say that because a lot of people make the mistake. I had someone comment, well, I frequently have people comment this sort of thing, but yesterday I had somebody comment that they lost a ton of money trying to short semiconductors in the last 3-4 months. You can't fight these things. When they want to go, they can be irrational. I mean, the old expression, right? Irrational longer than people can remain solvent. And so when you have this kind of move in semiconductors or gold or copper or Bitcoin, fill in the blank, whatever you want to choose. What can you actually do about it? Well, again, what people do tend to do about it is they tend to make big mistakes. They tend to either short it aggressively because they're upset that they missed it or frustrated. And look, I understand that response. Like, I'm frustrated I missed semis. I wish I was in semis right now. Like, who doesn't? But can you chase it? Well, history would suggest chasing, the runners like this. While it certainly can work, especially, Chris, I would actually argue that buying calls, I'm not a fan of doing that, but
everything's expensive.
I would say
it's expensive to buy puts. It's expensive to buy calls. I mean, the IV rank on Dell is 93.3. The IV rank on Micron is 97.6. AMD is 93.2. It's like, regardless of what you do, even I'm looking at like defined risk trades as well. You're not getting a lot of like asymmetry there. I mean, if AMD drops 10-15%, here's what I'm planning to do. I'm not going to chase it. I'm not going to do like the deep in the money call, poor man's covered call. It's like everything's expensive. I hate to feel like I'm doing nothing, but I can't look at a chart like you showed on, AMD or Dell and look at something like this and get excited about, I need to buy this. It's like we are overbought. We've been, since March lows, AMD is up 162%. You look at Dell, which is at all-time highs. Look at this from, February of this year. This is now up 177%. I mean, it's Dell. Like, I had a Dell laptop in college. Okay. That's like that's Dell. And now all of a sudden it's
for a long time.
It's a huge force in the market, and it's getting, it wasn't even more than like a couple $1 billion. But I guess the government's buying it. And so it's like that Trump endorsement is getting a lot of legs in the markets. And I don't know, maybe I'm overthinking it, but I just feel like as a risk manager first, it's hard to look at a chart like this and say, this is a great time to start positioning for bullishness. I mean, give me a pullback. Let's find at least the 21 period moving average and see if this thing has some legs to maybe get a bid. But if it pulls back, then sure, then I can position for something like that. But as well as I do, I will be furious if we come down here and I start to take a position and it just goes bye-bye. And it's the exact opposite of what I want, which is I'd like it to just continue to go higher. It's just hard to time that. So I'm going to stay in my lane, dude. I keep selling premiums around the SPY. It's not as great because the VIX is low, but I'm just picking and choosing my battles, staying very, very out of the money on a lot of my positions. Some of the recent trades I put in for pulver alerts, I did some of these trades. Let's go here. So I did IBM recently for pulver alerts, Walmart, Domino's Pizza, Workday. Those are not crazy, sexy, high flyers, but it's like I'm getting some skin in the game, make a few $100 pretty safely. It adds up just the same, and I'm not taking on any crazy, kind of volatility risk.
Yeah, and again, just to follow up, I think staying in your lane, whatever your strategy is, right? Like for people who are watching these sorts of moves, I'm speaking personally too. Like I love a good runner, and I'm a trend follower, so I love seeing these sorts of moves when I'm in them. They are frustrating when I'm not. But when we look at something like gold, when we look at something like this, like when it has these RSI readings that are just astronomical, and it's like every single day, it just looks like it's impossible for it to pull back. I mean, here's just a little bit of an example. If we just fast forward and just had a little bit of patience, gold crashed very violently. And by the way, like if you're like, oh, I'm rushing to get in, I got to get in. Like it's going to keep, look what happened. I mean, it's been months of ugly, ugly price action. And now gold is all this time later still down 21% from the highs.
Right.
So when you get these high flyers, when you get these really, really exciting moves going on, it can feel really tempting to be like, I have to be in this. It's moving, it's going, it's going. And you might look at this. I'm not, necessarily calling for this, but I'm saying it's very possible you could look at this 3, 4, 5 months from now, and it's down 20% from where it's sitting. Like
Easily.
very possible.
Drag a fib from that low from March or February to recent highs.
Yep.
And just look at that, 382 to 618 window. If it pulls back in there, that to me as a risk-defined trader, that's where I'll start putting some skin in the game. Is like, okay, we get a pullback. Let's get some pullback, see if the bid is still there, and then we retest the highs. I'm super happy with taking a return out of a trade like that versus chasing the parabolic, upside move.
Agreed. And I think, again, you watch charts long enough and you realize, like, when something looks so incredibly undefeatable, it oftentimes it is. It's just, it's like you just said. I think if more people in this room should, if you are not already, take some time to learn a little bit about options, because implied volatility tells you a really important story. And what, Chris, you pointed out about all of the call premiums for these sorts of stocks being incredibly high, it means basically if you're looking at buying Micron calls at like $1,000 call strike price, right? You're going to pay a fat premium right off the top to enter into that trade, because everyone wants to buy calls. And when everybody wants to buy something, the premium is really costly. And typically that really costly premium is going to make it really hard for you to actually make profit, because everyone expects this thing to move higher. When everyone has high expectations, they can be very easily disappointed. Yep. So again, I think patience pays in this game. I think chasing and greedy, like kind of have to be in it, last second decisions are oftentimes the types of things that get people in a lot of trouble.
Agree. Let's talk globally, man. I mean, so it seems like, when we started off this year, we thought, well, you know what, the world might be able just to have a good year, outperform the US. And now the US is kind of taking back the reins by storm, which is, AI everything, and with huge reflexive rally, even though we're in the heat of this conflict with Iran, we're somehow negotiating with an invisible man. I don't know if this is going to work out, resolve itself. Yay. I don't know. I honestly, like, to me, even it's old news. Like, I know the markets care kind of, but way less than they did before. I mean, oil is not at over $100. And so the market seems to think that's risk appetite. But looking at, like, okay, here's the German DAX, here's the FTSE. Look at the Nikkei, for example. It's like we haven't made all-time highs in those indexes in a while. I am in VT for an ownership position. This is the total world stock market. I did buy a pretty decent chunk on that pullback around 140 and 135. We were down here to the lows around 134, so that was a pretty good grab. This off the lows, index-wise, is up around 17.5%. So that's just under the S&P. The S&P rallied, from the lows around 19%. The Nasdaq's up 30% off those lows. But this is incorporating a little bit more than just the U.S. I'm just saying that because the U.S. continues to push the boundaries of, Cape-Shiller ratio, of high, price to earnings ratios and forward guidance on the S&P. We have insanely expensive stocks. We have insanely expensive stock market. Now, there's nothing in the stock market, Nick, that is essentially safe. If AI rolls over, if semiconductors roll over, if bottlenecks, deteriorate these aggressive price moves to the upside, I think that everyone is exposed to it. And I don't know if it's now. I don't think it's now. But let's say when the optimism fades, or some type of like bottleneck reality sets in, I just feel like when everyone is in the same chase and they all start dumping positions or taking profits, it's like, and there's nobody left to buy. I just feel like what can go up, like we've been seeing, everything just goes up and pumps. I feel like that's the start of it can just start giving it back. And I don't know when that is, but that's my concern, is like everything's getting pumped into the same concentration of semiconductors, computing power. And I'm sure SpaceX and OpenAI, like those IPOs would be really interesting to watch. Probably exciting. I mean, I'm trading NASA right now. I'm in NASA is one that it has like I want to say that ETF is like 30+% of it is made up with SpaceX. So that's been doing okay. I'm up whatever, like 30-40% in that one. But then I think VCX is the other one that I'm in. VCX is kind of coming back, but it's still down from where I started buying it. So let me check here. VCX is the drawdown's been improved a little bit.
Yeah.
So I bought it at 310. It's back up to 230. This is up to like $550 at one point in time. Let's go to that chart really quickly. So NASA has had a pretty good run from 25 up to 40. I'm hoping that this will continue to pump as we get into the IPO time and window. And I'll probably dump it, honestly. I'll probably be out of the trade. If we get a big pop through the IPO, I'm probably trailing and getting myself out of it. And then VCX is this was kind of the poor man's way of getting some exposure to Anthropic and OpenAI before they go public. So I'm looking to see if these will have any type of additional pump to the upside. That was a recent high hit around 570. If we get up to these levels, I'm most likely to start trimming and taking some profit and not chasing. Because once they go public, these pre-IPO ETFs or symbols will probably have a very different price action once the official IPO happens.
Yeah,
so
I do think
exciting stuff the next 90 days.
Yeah, I think it's an interesting window of time, because it's like, are we going to just see this thing kind of pump into the exciting IPOs, and then what's the follow through? Is it going to keep moving? Is it going to continue from there? Or, who's going to go first and who's going to get all the bidding, and who's, I know that's another thing, is like a race to go first so that you can get the hype and the attention. But interesting stuff, Chris. I mean, we're out of time here. We got to move on to our next show. But we will, of course, definitely be talking more about those IPOs as we count down the clock to that, and whether or not that can continue this hype rally. I'm watching the dollar personally, bond yields, of course, those two things really close on my watch list. I'm also watching oil just to see what happens as we test this 90 level. So stay tuned, guys. If you're new to the stream, make sure to subscribe. Also, go find Chris Pulver. And if you're interested in seeing the trades being shared by Chris inside of our Discord group, you can check out the link we'll drop in the live stream chat to speak to our team about setting up Pulver Alerts access, so that you can start seeing the trades shared by Chris, or you can find out information about trades shared by myself as well. Just head over to our website, a1trading.com. Up next, we have Miko Audu taking over the stream. Chris, thank you very much for coming on, man. Great conversation.
See you. Thanks, Nick.
See you guys.
What if I told you could get a copy of the Edge Finder completely free thanks to this live stream's sponsor, 8cap? 8cap is a regulated brokerage that has a special offer for viewers of our channel here.
What's up,
I wanted to tell you a little bit about how this offer works. There's really only 3 simple steps to setting up a free copy of Edge Finder through our partnered broker, 8cap. Step 1 is you have to use the link being dropped in the live stream chat or down below in the description to create a new account. Step 2 is go to this link, scroll down on it, and you'll see the requirements that you must make in order for 8cap to essentially buy a copy of the Edge Finder on your behalf. Once you've created an account and deposited the required amount of money in order to qualify for one of the offers on that page, step 3 is to simply contact 8cap and or A1 Trading's team. On that page, there will be information for that. And then we will be able to essentially grant you access to our tools completely free, bought and paid for by your new brokerage, 8cap. Unfortunately, 8cap does not accept US traders. However, if you're outside of the US and interested in exploring this offer in more detail, again, like I said, we'll have that link in the live stream chat or in the description down below. Alternatively, you can just head over to a1trading.com/8cap. Thanks to 8cap for sponsoring today's show. Now back to the content.
Okay, what's up, people? Hope everyone is doing good. I think okay. Yeah, what's up, people? Hope everyone is doing well. And as always, I'll go through many different markets which I'm interested in, some which I'm trading, some which I'm looking to potentially trade next week. And if there's any potential markets you guys are interested in, any specific timeframes as well, feel free to let me know in the chat. I'm more than happy to take a look and go over. But I haven't actually had such an active week. Last time I was on, we discussed a couple of my positions, which I have running at the moment, which was USD/JPY and US30. Still sitting in them, haven't really done anything with them. US30, I've managed to move stops and take some partials, but USD/JPY is still kind of sluggishly trending higher. Again, the idea with this is that the yen is still primarily quite weak. I'm still expecting that trend, that that trend to continue pretty much against all currencies. USD/JPY, I'm not really trading because of USD, it's more so just the yen. And because in terms of the technicals, USD/JPY looked the best at the time as well for entries and a specific stop loss as well. So I hopped into this position a couple of weeks ago now, and hopefully we can get pushed back to the high there. That's where I'll look to remove risk and maybe secure some partials as well, but the real target is a push back to the 2024 high that we made, of course, in 2024. So seeing if we can get pushed back to that high. US 30, I took this actually even before this one. This is a few weeks ago now. Only recently we've seen momentum kind of pick up and actually actually create a new all-time high, which is what I was looking for when I got into the position. We had a lot of consolidation. Finally, we saw a move towards the end of last week. This week, not really much has happened either. More so kind of bearish momentum, but now kind of flat. I have trailed my stops, as you can see there, just above 49,600. And I'm just going to see what we can do. I mean, other indices look like they may be getting ready to retrace. Maybe that might mean some retracement for US 30 as well. But if we do trend, the goal is to stay in the position as long as possible, trail behind, and see how much we can take away from that move. But yeah, those are really the only markets I'm interested in. I'm trading in right now. In terms of what I'm interested in, I really like gold. I'm not too sure if I'll get an opportunity. I might have to drop to the lower time frames for a trade. This is really the main idea I had coming into the week. But as you can see, the market opened up pretty bearish, and we just saw a lot of downside momentum this week. We haven't really got that bigger retracement. So yeah, with gold, I'm not too sure we'll get this opportunity anymore. So I'm actually shifting my focus back to retest this area. The goal is simply looking to try and catch another lower high. We've got one over there, a second. I'm looking to see if we can get a third, and I'm essentially looking for us to come back and retest the support area. We might even break through that as well for gold, but in terms of targets for a trade, I'm not going to try and push the trade too far, because I do expect to see buyers starting to come into play and take a bit of a bounce. So this 4300 area is roughly the zone I'm looking for gold to come into, and then we'll see what happens from there onwards. So I'm quite keen on gold, as you can see by all my drawings, but yeah, I'm gonna need a pretty lengthy retracement for me to find some entries. There might be something a bit more aggressive if I was to drop to like maybe a 15-minute chart, which I'm not entirely keen to do, but maybe we get more of an intraday pullback into structure here, which looks as if we've got so far. We may just roll over from there, so that could be something to look out a bit more intraday. But I like gold, and I still do see more downside for this one. And I've been looking a lot at Euro USD and Pound USD for some shorts on these as well. Euro, I'm still looking for a bit more upside. We've got a load of consolidation on our hands right here. Not a big fan of the price action. Looks quite exhausted. We had this strong bearish move the past couple of weeks, and looks like price is essentially tired of that. So I'm looking to see if we can push higher, go find some more sellers above where price is trading, more so around this 1.17 area, and then maybe we might see our next leg kind of moving in a bit of a descending channel here. So I'm liking the structure there for Euro. Pound USD, I'm looking at more downside as well. I'm looking to see if we can get a retest of this structure, which we're actually coming into now. So Pound USD is of my interest currently. I was looking to see if we can get another retest of this area, but I mean, we could do, but this will be my focus for now. If that breaks, then I will see how we can do around 1.35. But the idea is prices pull back, we've come back into structure, we've seen some intent there from the bears. I'm looking to see if we can form a lower high, something that lines up with that level, and then a drop back to that low. And the only way I would rethink the bias is if this high gets taken out completely there, then I would rethink that bias. But yeah, Euro and Pound, I'm liking the downside opportunity for both of them. I'm not really looking to trade both. I'm just going to see which one presents the better opportunity in terms of risk, entry, etc. But yeah, pound is coming into an area. I want to see how we respect it and how we retrace at the moment, showing a bit of strength. But if we can hold this, I like the idea for more downside as well. So that's really where the focus is for myself. What's up, CS Integrators? Hope you're doing good. What's up, Raphael? What's up, Yoshi? Welcome. Yes, I can take a look at pound CHF for you. Of course, any requests, just drop it in the chat. More than happy to take a look. Might take along at 1.054. Okay, we can have a look at that. Pound USD shorts. Yeah, Raphael, as I mentioned, I quite like the idea of pound USD shorts. I'm basically looking at price retracing anywhere within this zone, really. And at the very least, the pushback to this support. If things go well, we might be able to get a push there. Maybe if things go very well, maybe even this low, but that's a bit more speculative. So yeah, I like the idea for pound USD shorts. Nothing quite there yet. I know we're coming into the zone, but I'm never really the one to short just because price is in a good area. I want to see price, show signs of rejection that, okay, we're not likely to break it anymore. Now we can push further. I'd probably drop to an hour chart for an entry. Anything lower would probably be not meaningful enough for me, at least for how I trade. So yeah, pound USD shorts, I'm keeping an eye. Pound CHF longs, not really a pair I've been focusing too much on, but we can take a look. So pound CHF, I actually looked at this one yesterday on my stream, and I basically said, okay, we've got a pretty nice equal range here. A couple fake out in both directions. There's one, there's the other. But primarily price has been just moving sideways between 1.06 200 roughly and 1.05 100 roughly. So if I was looking for any type of long opportunity, it would be at the lower end of the range at the extreme, or of course if I'm looking for a short, it will be at the high. Yeah, in terms of where price is now, I wouldn't really be looking to do anything, to be honest. I mean, what price did you mention? 1.05 400. That would be roughly around here. So yeah, I would not be so confident. Again, when price is flat and ranging, the lower I am within the range, the more confident I am in the trade. Not necessarily because it will work, but because I'm positioned a lot better to take advantage of the trade if it does work. And I probably will have less losing trades as well, because for a range to fail, the market has to break out the range. And if you're trading as low as possible within the range, well, your stop loss is going to be in a logical place. And if price does hit your stop loss, it's either a big fake out or price is actually breaking out. If I have a stop loss like here, for example, I could still get triggered and price could still perfectly respect the range and still bounce in my direction. So I want to get my stop loss, preferably underneath the low, even better underneath the fake out low, but that might sabotage the risk reward to a degree. So yeah, I want to be lower down as possible. So not that 1.04, 1.054 can't see a bounce. It absolutely can. I just would rather buy lower than that, or at least have a stop loss, in this kind of area here. If I was going to engage in pound CHF. So I like the idea, but yeah, I would wait for price to push a little bit lower. Euro Aussie longs, I can definitely take a look out, no problem. So Euro Aussie, again, not really a market I've been paying too much attention to. I did comment on this one yesterday. But yeah, personally, I'm not the biggest fan. I mean, we've seen really nice momentum. The market's been trending bearish for a while. We're looking a bit exhausted, so I do anticipate some retracement, but that's about it. I'm not looking for any more in-depth analysis than that, to be honest. Again, I only want to be very descriptive or very analytical when things are, where things look clean. And to be honest, in FX, that's not always the case. Most of the time, it's very messy, and it's best to actually ignore the price and move on or come back later. But yeah, with your Aussie, clear signs of exhaustion. You can see by how many times price keeps making a low and quickly retraces afterwards. So clearly price exhausted. Of course, we didn't really make a lower low past this point. We've had a bounce. So, I mean, I like the idea of some short-term sells because predominantly bearish momentum is still the dominant factor. The bears are still primarily in control, even though it looks like they're tiring. So I would suggest looking at the extremes from a bearish angle, some shorts near the high, but I wouldn't be looking for any home runs. The market looks quite tired, so with that, I'll be conservative with my take profits, not trying to push the trade too far. So I'll look at this high. This does take us into last week's high. If price can test that high, reject it well, I think that'll be a smart place for an entry and a smart place to put a stop loss above as well. And then who knows how far we could push, but I would be very, very watchful of that trade. I wouldn't trust that the trend is just automatically going to continue. So yeah, Euro Aussie longs, I would wait for a lot more upside before judging any longs. I want to see more consistency. Yes, we've had a bounce, but that doesn't really suggest that I'm looking to buy just yet. I'll still be in a bearish camp with Euro Aussie, just a bit more cautious. Hey, appreciate it, Gapes. But yeah, I've been on Trader Nick's channel for quite a while now. Okay. Yes, we could take a look at the Russell as well. Yes, we can go through gold's look at the gold silver ratio. Okay, it's been a while since I've looked at that. No problem, CS, happy to help. The 1.05 to 1.51 range looks better. Yeah, that's kind of where I'd be a bit more invested in, that kind of zone there, buying a little bit deeper. But yeah, we can have a look at the Russell. Is that US 2000? Yeah, not indice which I actually look at too much. I normally just focus on the S&P, the Dow Jones, and US 30. But we can have a look. Yeah, I mean, price action looks pretty clean. This actually looks quite steady compared to the other US indices. I'm seeing consistent higher highs and higher lows. Nothing looks too out of place. Nothing looks really overstretched. Looking at the S&P and the Nasdaq, clearly we've seen some really exponential moves which do look a little bit out of place, a little bit overstretched, and we could be seeing maybe a larger retracement at some point. Same with the Nasdaq as well. US 30 not really the case either, but Nasdaq looks exceptionally stretched. But not with the Russell. This one kind of looks very organized, very healthy. So that means to me that if we were to see a pullback, buying the dips just make absolute sense. Of course, not guaranteed or anything, but that remains the play until structure starts to give way. So on a bigger scale of things, this is a primary low I would keep an eye on. I would say as long as we stay above that, I'm bullish for the next cycle. Of course, if we drop to a more intraday time frame like the 4 hour, this becomes a very interesting area because prices dipped into this area twice and still held that bullish structure. So this is automatically an area which, if price was to revisit, I would say buys make a lot of sense. But I would say we're a bit more stretched locally here. Price has had a very considerable move over the past week. We've just gone and taken out the last high. The last time price did take out a high, we had a pretty lengthy pullback. So I wouldn't be buying any dips up here just because there's a lot of room for us to pull back into. And primarily, this is really where I want to find my entries and get a stop loss below. I'll be a bit more protected down there. So yeah, I'd only be looking for pullbacks for this one. I suppose maybe if you're very intraday, you might be able to find like a short-term buy of support here, back into prior highs. Maybe we might go further than that, but I just wouldn't feel comfortable buying after such a strong move and after seeing what happened last time as well. This is really the prime real estate there. So yeah, very, very bullish. Just looking at pullbacks, essentially, there's a few areas to look into. Even if we have a deeper pullback than this, this becomes an interesting zone too. But of course, that's probably a conversation for much later if that was to happen. But yeah, that's kind of really where my head is at. What's up, Cedric? Haven't seen you on the channel for a while. Oh, yeah, I've been here most weeks, but good to see you. Hope you're well. I put my stop loss as per market structure. Otherwise, Trump might cough and you're done. That's true. I mean, there's not much you can really do about that, to be honest. Was looking for Euro Aussie longs because of the recent Aussie data not being the best. True, we can see a bounce from that, but I would always wait for a bit more. I mean, I'm a very technical trader, so I have my bias in terms of the way I view the market. But I'm always waiting, especially because Euro Aussie had that kind of monstrous downtrend for about, a few months there. I wouldn't really want to be the first one buying that without a bit more technical emphasis on the market structure. We've seen a nice double bottom there, and it looks like price might be pushing higher. If we can see some more higher highs and higher lows over the next maybe week or two, then I think the buys are a bit smarter. But of course, if Aussie generally does shift, then yeah, we could see a rise. But I'm a very technical trader, so that's where my bias comes into play. Hey, what's up, Malik? Welcome to the stream. Hope you're well. I'm doing good. Good to see you. BTC below 50k. We can have a look at Bitcoin. Yeah, I've not been a big advocate for BTC at the moment. Price is not looking too good, and yeah, I do think more downside looks likely. Below 50k is a big shout. We've still got a long way to go before we get there, but based on current daily price action, lower prices do look the more likely outcome at the moment. We have a very channel, a very bear flag like structure here, and typically what that would mean is we're likely to see continuation, and pretty much this is what happened a few months back. Corrective structure, we had the impulse before it, corrective structure followed, and then we had that that explosion of momentum. Could we see the same here? Very much possibly. Below 50k, I would say that would be pretty reasonable if we do see another one of those legs happen. 50k is not too far away. In terms of the more immediate price action, we are coming back into structure. We could bounce. Would I be looking for a buy there? No, not really, especially with how price is moving. I would expect actually a break of that channel low. I would expect to break. I mean, I wouldn't be looking to sell it, but I would expect price to break. So I would be on the bearish side of things for BTC. I'm looking across the board. Ethereum doesn't look great either. XRP I haven't looked in a while. Last time I saw that one's at support. But yeah, BTC not looking good. So I do have a bearish bias on that. If we take a quick look at Ethereum, very similar price action, I believe. Yeah. So again, similar bear flag type price action. We've broken out of that. It looks like Ethereum is kind of doing what BTC is doing, but just slightly ahead of it. Maybe BTC is going to follow and do exactly that. So yeah, it's not looking good for cryptocurrencies right now. I think XRP is at support. Has it broken through that support? It's testing it. It hasn't quite broken through it yet. So that would be pretty interesting actually, if we do see XRP break through that too. And judging from the price action on Ethereum, BTC, I wouldn't be surprised if we do. And if that does happen, this becomes our next significant low to look out for. So yeah, it's not looking too good, to be honest. Happy to help Sora. Yes, we can take a look at EuroCAD, no problem. You could use still stream. I don't get notification. I do stream Wednesdays, London session, so 10 a.m. UK time. I still stream. Yeah, YouTube is a little bit inconsistent with the notifications. I had some people saying they're not receiving them, but yeah, I do stream on Wednesday mornings. Okay, so let's take a look at EuroCAD. So EuroCAD, interesting price action. I just want to take a look at the bigger picture here. So yeah, EuroCAD. I'm not the biggest fan of the price action, to be totally honest. It's a pair I would probably want to stay away from. Let me know your bias on EuroCAD as well. I'm interested to know what you're looking at. Yeah, so with EuroCAD, what I'm seeing here, okay, we had some prior bearish structure, lower lows, lower highs, very, very choppy like, but to a degree, we were slightly falling. Then we had this exponential kind of breakout there. and prices pretty much reversed 110% of that. We surpassed where we actually saw that momentum, which is quite telling, because if price is going to reverse such a big explosion of momentum, normally I would look at that as, price really tried to sell off, but buyers just completely reversed that. So I would be looking at more upside because of that. Since then, we've had a pretty big retracement. It looks like price is finding some type of bottom here. I would be favoring buys, but I wouldn't be favoring buys into where we're pushing right now. It's a very awkward time to be buying EuroCAD. Yes, we're coming to some resistance. There might be some short-term sells, but that's not really something that would interest me. I would be looking at price pushing back towards this high here. The best way to trade that, I would say either one or two ways. I'll wait for price to take out this high and then look for the next retracement, and that would be something I'd be interested in. We've got this low, a higher low. The third one is where I'll try and find an opportunity if that was to actually happen, because we could very much break out and just keep flying. But that would be something I'd be interested in. Or two, we just completely reject this area, come back into the low again, and that becomes an interesting place for a buy. Either of those options make sense to me. I can find some logical stop losses. I'm in line with market structure. I'm not buying a bit too high there. I can maintain, strong support. But anything right now kind of doesn't make too much sense. Of course, if you maybe scale to like a 15-minute chart, it's a different story. But from a 4-hour perspective, I'll be a bit more patient. But in terms of bias, I would be leaning bullish here. But we're not really in any vicinity where buys make sense right now. And altogether, to be honest, it's a market I would personally avoid, just because I'm not really seeing clear dominance from the buyers or clear dominance from the sellers. When I take a buy, it's because buyers are overwhelmingly in charge of the market, vice versa with the sells. And typically, that's when trending behavior, that's when trending environments actually give us those type of opportunities. But that's kind of my take on EuroCAD. Hopefully that made sense as well. I will go through quickly some of the pairs which I'm looking to trade for next week. Happy to help out. I'll go through some of the pairs which I'm looking to trade next week, because we're approaching the end of the week now. I don't think I'll find any new entries. Maybe barring pound USD, I might find an entry to go short there. But that to me would be the only market which I'd like to find an entry. Euro, I need a much bigger retracement. I'm looking, okay, let me go to FXCM. I'm looking at a much bigger retracement, which I don't think will happen this week. So yeah, in terms of my interest, like I said, I really do like gold shorts at this zone here. So 45.60, again, probably more of a trade for next week. I don't think we'll get there by the end of the week. And if we do, I'm not sure I'll get an entry signal either. So gold shorts I quite like. Pound shorts I quite like. That could happen today, so I'll keep an eye out. Euro shorts I quite like, but again, that's probably for next week. I'm still managing USDJ4, I'm still managing US30, and that is about it. Yeah, I don't think there's anything else on my watch list. So at the moment, it's a little bit stale in terms of what I'm looking at personally. What's up, cycling? Hope you're doing good. Okay, yeah, we can take a look at Swiss yen for you. I think I'm about to run out of time, but I can quickly go through this. So Swiss yen is, of course, a yen pair. So that automatically puts me in a bullish mindset, just because the yen has been, consistently weak for such a long time and doesn't really look like it's slowing. You can have a quick look at the Japanese index. That's still trending up, and as long as that stays true, yen is likely to still be weak. So as long as this keeps going up, I would expect all the yen pairs to be going up with it as well. Swiss yen is included although Swiss has had its own troubles recently, and you can see we've formed a bit of a range here on the daily chart. Equal highs around 203.7, equal lows around 198. So until we get a real continuation of the trend, we'll need to see a confident break of the high of the range. If that doesn't happen, then we're going to maintain the range. So if you're looking for bullish opportunities, there's pretty much two that make sense. Specifically, if you're looking for more swing trading opportunities, that would of course be the break of the range and then opportunities above it, or of course price push back to the low of the range and you're looking for a bounce. Keeping it very, very simple. In terms of more short-term opportunities, sure, there's some bullish structure here. Price is making some higher lows. We might be trending up, but again, that short-term, you're trading within the range. You're pushing back into resistance. You very well could see this. So I wouldn't get too excited about any buying opportunities in that area because we're coming up to a pretty big obstacle. So if you want to keep it simple and you're looking for more swing opportunities, which you could hold for maybe a week or two, then yeah, buys above the range high. Once we get a breakout, or back at support make the most sense. And if you are looking for sells, then yeah, that could make sense. I wouldn't really go for it personally, just because this is the bigger trend at play. I don't really want to be shorting at all until I see bearish structure actually come into play. Then yeah, maybe I do take a short in the future, but apart from that, I'll stick with the buys, keep it simple, follow the momentum. But yeah, guys, we have reached the end of my segment. I do appreciate A1 and Nick for having me on the stream. I do really appreciate it. If you want to see more of my content, they've dropped a link to my channel where I do similar content there. But guys, thank you so much for having me on. Hope you have found it useful. I will be on next week. Take care, and I'll see you all in the next one.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. How's everyone doing today? Hope you guys are having a good morning, good afternoon, good evening, wherever you guys are watching in the world. Like always, if you guys have any chart markups that you want me to go over, anything that you're looking at yourself, feel free to drop those into the chat, and I will do my best to go ahead and cover them. But let's go ahead and get started here, starting off with the Edge Finder here, because we did see a little bit of a softer dollar reading this morning. We did get PCE this morning come in line with expectations, somewhat hit or miss, right? But very, very close to those analyst expectations. And then you did see jobless claims tick up just a tad as well. I'm going to call that in line with expectations too. But you are seeing a little bit of a softer dollar reading there on the fundamental perspective. And you're seeing some euro bullishness there. So you're seeing euro Aussie, Europe yen there. So I was looking, right? I was like, should I switch bullish euro? I don't think just yet. But let me make a case for what the euro could start looking good at. So we do have a solid right here. Retail sales was a little bit of a bullish there. CPI came in line with expectations last time on May 20th. May 6th came in a little bit hotter than expected there. The unemployment rate still high up there, and PMIs, right? PMIs is what's weighing euro down right now at the moment, the growth part of the economic heat map there. We do have PMIs next week, so we'll go ahead and see how that updates for now. But we are starting to see some euro bullishness there, euro Aussie, euro yen again, so and euro CAD as well. Well, euro CAD's borderline, but let's go ahead and look at euro Aussie real quick. And again, guys, go ahead and drop those chart markups there that you want me to go over. So euro Aussie, let's see what this chart is looking like. It's getting a bullish reading now, and you are towards the bottom end of this range here. So I don't know. I don't know if I want to take this. I am longer term dollar bullishness. However, I do think that we can get, and this is a big can, right? Like, we don't know for sure if this is going to happen or not, but I think there is a possibility or a world where you get some kind of a dollar pullback in the very, very short term. And then ultimately, I want to be a buyer of dollar. I've told you guys many times before, I'm looking for a break of retest of 99.5 or just a pullback here in dollar index. So it seems like right now this level of resistance is holding firm for now. So we'll go ahead and see if that is the case, tomorrow, Friday, whatever the case may be. But I'm looking to go ahead and wait for a pullback in dollar. So if I'm thinking that there's going to be a pullback in dollar or it could happen, then it can be safe to assume that you can play Euro Aussie to the upside. So was it Euro Aussie? Yeah, Euro Aussie to the upside. So I think that's a possibility. However, this is a very steep downtrend there. So this would be a mean reversion type trade. So I would honestly be targeting, I'm not going to be shooting for the stars here. It would be somewhere around here, the midpoint of this level. So if I put a fib from low to high or high to low, the midpoint would be somewhere around here, right around this 50-day moving average. So let's go ahead and see. Let's see if this trade is worthwhile. So this is the midpoint here of the range, right? Go ahead and go long right here. Hypothetically, you're targeting here, and then your stops will be below structure here. That's a negative risk reward. So not the best. Now, would it look better if it was something like this? Sure, right? But it's not a good trade. Just my personal opinion. And the reason why the risk reward is not attractive is because I'm not targeting all the way up here. If I was targeting way up here, then the case would be different, right? It would be solid, almost a 2-to-1. But I'm not, right? This is a very strong trend. You are getting a bullish reading, but this is a very strong trend to the downside, right? So yeah, I'm not going to take that trade. Just how I'm thinking in my head. Quick process, right? Hey, Simo. Hey, Sluggy. How you guys doing, man? As far as other opportunities that I'm looking at, I'm still looking to go ahead and go long dollar CAD. Dollar CAD has been annoying for me because it has just been going up and up and up. No pullbacks at all. That's kind of the case with dollar CAD. In fact, we're getting to that level where I was actually going to be targeting. If I were to be in the trade, it would be up here. So we're starting to reach that profit target area. So no pullback. I am open to buying it. If you do get a pullback to this 50-day moving average or right here, if I re-update the fib, let's see where the 38.2 stands. 38.2 is right there with that 50-day moving average. So this is acting as dynamic support, I would say. So I'm going to move my alert up there. I'm not going to be too conservative as far as entry points. But if we do get the pullback into this area, I would be happy to participate alongside. But it's kind of what I'm looking for. It's a little bit frustrating. This is similar to the Australian dollar positions that I was trying to get into in the early part of this year, where the RBA was increasingly hawkish. They had elevated inflation, and they were looking to address it by any means via hiking. And the Australian dollar just kept going up and up and up. So similar behavior here with dollar CAD. But again, I'm going to be patient because if we do realize what happened there with Aussie is that, yes, it was stubbornly strong. However, you did get one flash hit of depreciation in the Australian dollar. So I'm kind of hoping and waiting and being patient for a similar situation to happen with dollar CAD. Speaking of a similar situation like that, let's talk about equities, right? Again, similar behavior, just up and up and up, straight move up in a straight line almost with no pullback, right? This is a very good looking chart. I would say it's very strong. However, I would need a meaningful pullback to be comfortable putting risk on and then, taking a trade here. So again, the 50-day moving average is acting as dynamic support. So that's what I'll be looking for here, 30.2% retracement level. Anything below that, not too interested, or anything above that, I'm not too interested. So I will need to see a pullback up to here. Let's say hypothetically that pullback happens today. That's about a 6% drop. So still pretty decent, I would say. Same thing with Nasdaq and everything else. Just straight move up here. I need some kind of a discount because this is too much here. I was listening to the segment there with Nick and Chris saying that the premiums on calls are extremely high, right? So you would need a very big move to get a profit, right? Similar behavior to when you saw the April sell-off, the tariffs last year, right? Where on the flip side, it was the put premiums were sky high, and you would need an extreme move to get profit, right? So I'm not saying that I'm calling a topper by any means that this is similar to the bottom of the April tariff, but I am saying that whenever premiums and stuff get too high there, too extreme, maybe market starts to slow down a little bit. So we'll go ahead and see what happens there. That's my thought process on equities. Nothing has changed. Again, just waiting for a decent pullback in them. Not looking to participate or not looking to short or anything like that. I'm seeing some pound. So pound US dollar. Yeah, so I was saying that I would like to go ahead and short the pound, or it would be wise to short the pound towards the upper end of this range. And we did get that upper end of the range. Now, I personally don't like trading the pound. I've had a bad experience with the pound. I like the euro dollar better for many reasons. I think it has a better correlation to the dollar index, which if I'm trying to trade the dollar, I want to go over the euro dollar. So I've been waiting on that one there. But the pound has a good score there to the downside as well, right? I think the pound basket is still getting a bearish reading on the edge finder. Yeah. Pound Swiss, pound Kiwi, getting bearish reading there. So very, very good trade there. Fantastic. Congratulations if you got into the pound short. But I prefer the euro dollar personally. Let's see. They did a very hawkish hold by RBNZ. Yep, they were one away from getting actually a rate hike, which was very, very unexpected. Market was not expecting that at all. In fact, me personally, as well with the market, thought that the Royal Bank of New Zealand was actually done hiking, that they had done the max that they could. But we were proven wrong today. So we got a hawkish rate hold, meaning that we're borderline of a hawkish rate hike. And so that's why you saw that big move up there in Kiwi dollar. Now, as far as shorting the Kiwi dollar, I probably wouldn't do it anytime soon, just because you did have that shift in dynamic. And if inflation does stay elevated, then a lot of central banks are going to have to actually start pivoting into being more restrictive, right? Either rate hiking or holding rates steady. Let's look at global yields for a second. Let's start off with gilts, right? Coming down here, this is the 10-year yield. Japan, still sticky. Give them that. Euro coming down a little bit. And look, this is I'm going to flag this as well. So this right here, where I'm going to flag them, is the start of the war. So this is, let me verify first. Yeah, this is the start of the war. So euro yields, 10-year yields went all the way up here, and they're starting to pull back a little bit, which is good. Let's look at Kiwi. Start was over here. Still elevated. Very much still elevated. Now, they haven't broken down. So what I would like to see that's pretty good, or if the market's expecting or pricing in maybe a more steady stance or dovish stance, would be something like this, right? If you were to see, sorry, this is supposed to be support. If you were to see yields here break below, sluggy, I'm looking at you there with the Australian yields, right? Similar situation, right? If you were to get the yields break below this level, then I do think that's actually positive for the rate cut story in the New Zealand. Same thing with Australia there. Right, similar thing. If you were to get a breakdown below here, that would be positive. US 10-year yield still elevated, right? We started off right here, and this is probably one of the more relative higher yields compared to everyone else, as we just saw here, right? Where other ones are positioned to start breaking down, US is still elevated, right? We're still in a clear upward trend there. So it's probably suggesting that the market is expecting a higher rate environment for the US. They are expecting that inflation is going to be sticky in the US. So that's what I like about the US dollar story there, that you do have that still room to continue hiking. I haven't looked at this in a while. Let's look at CME Fed watch probabilities to see where markets are at as far as rate hikes. CME probabilities. And okay, so they have, no, they're still the same. So December-ish, still very, very much a possibility. So markets are still pricing in that restrictive environment there. So that's going to be fuel for the dollar. So again, I am looking to pick up dollar if I get some kind of a discount. 200-day moving average somewhere over here, or a deeper retracement to 98, or a break and retest. Either or, I'm looking to participate. Is the current expectation USD strengthening? Yeah, me personally, I'm in that camp. I am very much in that camp, right? You have yields elevated, right? The 10-year yield is elevated. 2-year yield, this is a funny chart. I don't know what happened there. I think this was an exchange thing. But 2-year yield still elevated, right? You do have CPI elevated. You do have PPI, which was at 6% elevated, right? Very, very bad for the inflation story there. So if you go to economic data, inflation data, go to CPI in the US. Let's go down the line, right? The US is at 3.8%. New Zealand is at 3.1%. Japan is still negative. The pound is at 2.8%. Europe is at 3%. Swiss is extremely low. Canada is 2.8%. And the only one that is beating the US in inflation is Australia at 4.2%. Though they did have an improving number there. So maybe that trends down lower. However, the clear winner here right now is the US at 3.8%, right? It is a high inflation, so they are starting from a higher vantage point. So I believe that the US or the Fed will be one of the more restrictive central banks compared to the other central banks. So that's why I think that the US dollar is poised to go higher. Um, Also, too, the US economy is holding up quite nicely despite all of this, what's going on. So that's also good, right? Like equities, if you were to get rates at, 3.75 to 3.5, where they're right now, that's actually a pretty good sweet spot, right? Once you get into four camp, that can be hurtful to equities, but anywhere from like 1.5 to 3.5 is a sweet spot for equities where you can still have solid growth. And that's where we are right now. And so that's why you're seeing, equities rally, you're seeing valuations up, all that good stuff. Hey, Marco.
Hello, Alan. What's up?
How are you, man? Pretty good. Pretty good.
I'm pretty good as well. So, did you see the PCE print?
It came in pretty much in line.
Yep. Came in line with the forecast. I was looking at it. I was thinking of selling euro dollar because I was expecting a hot print. So I was expecting a 0.4%. Main reason behind it is when there's sort of a regime shift, when the market conditions change, which right now the market conditions are pretty much different than what they were at the start of the year. The guys predicting the PCE, usually they kind of under predicted, or the forecast is usually lower than the actual print when there's a new shock, when there's a new pressure on inflation. So I was thinking it's going to print 0.4%, kind of in line with what the CPI and the PPI have been doing, just printing some pretty high numbers, but it didn't happen. We printed, I think, right on the dot, which ended up being no impact on the market. So the market stayed pretty flat.
Yeah, pretty minimal impact there. In fact, you are seeing somewhat of a very minimal softer dollar here today.
Yeah. I mean, I wanted to position myself short on EU, and I think this probably would have been a good confirmation to go back in my EU short. So if I just put up my screen, let's go to remove this, add this. So if we go to EU, the position was here, and I thought about possibly re-entering today with a hot PCE print, but that didn't really happen. So I don't know. I'm not so bullish on the dollar as I was, let's say, last week. What about you? Are you still looking for that pullback to get long USD?
I think a pullback is possible. Now, a lot of like the move and the pullback, I would say, would have to do with some kind of a de-escalation in the Middle East, right? Like the safe haven is getting priced out. Right now, you are seeing oil up on the day, but it is materially lower than 104 last week. So that's good. Yeah, I think that, right. I think there's some risk to just putting a market order right here with the dollar index, right? You don't have a technical confirmation because sure, you could, and I'm looking at DXY here. Sure, you could put a market order buy, you get the break and retest that you're looking for, and then you just, it keeps going higher and good for you. But the risk there is that if you were to buy dollar index here, and then you do get the pullback all the way to the 200-day moving average, which should be right around here somewhere, or even at 98. Well, then you're taking unnecessary drawdown, right? So I would rather be patient, either break and retest or just the pullback there. So I'm gonna be patient here and wait for a pullback if I do get one. Now euro dollar here, you are at this level of support right now, which is pretty much in line with the dollar index where it is right here. So it's pretty much the same chart, just inversed. I do like the technicals though. You are seeing this 50-day moving average act as dynamic resistance here. Like if I go to a 4-hour time frame or something like that, and I just delete this just to make it easy on the eyes, you can see here that we've traded below this level here, and this has acted as some pretty solid resistance the entire time. So I do like that. Let me see what the edge finder is saying, because I did see some euro bullish pairs there on top setups. And also the dollar reading got a little bit neutral there. It was bullish before and it was neutral now. Let's see, euro dollar. I'm just gonna. Yeah, it's getting a neutral reading of -1. So we'll see. One thing I will say though, I might be more active next week. We do have PMIs for Europe, our Eurozone on the 1st and on the 3rd, I believe. So that can give me some good indication as to what the economy is looking like there on the growth side of things. Because if I go to the eco heat map there for Europe, you do have unemployment rate still sticky, but last print was in line with expectations, actually trended down from 6.3 to 6.2. Inflation is elevated, so they've got their CPI at 3%, PPI 2.1, so it actually came in higher than expected. The only thing that's really weighing it down is those PMIs, which we're going to get a reading on next week. So we'll see. If PMIs come in really strong there, then you will see some euro bullishness, and then maybe I can get the pullback that I'm ultimately looking for. Maybe get a quick pop there to 1.72 or somewhere up here, right? But if you were to get weaker PMIs, that just confirms what we've been thinking, Marco, about the weaker growth in Europe. Then I can definitely expect euro to get hit hard, and then I can get the break and retest that I'm looking for. So either way,
Okay.
I think it's going to.
Whoop. I'm sorry. Can you hear me?
Yes.
I cut out a bit. I guess my internet got a lag or something. So can you repeat the last part?
Yeah, I said either scenario, whether you get strong PMIs in Europe or weak ones, I think it would pay dividends to just go ahead and be patient a little bit. Because if you were to get the strong PMIs, you get the quick pop there in the Europe or in the euro dollar. Or if you were to get a miss in PMIs, confirming that weak growth there, then I would expect some weakness in euro dollar. And then I can just wait for the break and retest and then enter there.
And anything that you like a bit more than EU? So for
dollar
week,
CAD. Dollar CAD. I mean, it's so strong right now. It's giving me the same characteristics of the Australian dollar from earlier this year, where we're just moving straight up there. So I definitely want to participate. I mean, this is definitely a strong market there. The Canadian basket as a whole has been very, very weak recently. So I do want to participate. And I think if I'm in currencies, you want to trade the strongest possible versus the weakest possible. I think the Canadian dollar is one of the weakest ones. And then as far as the strongest one, I would say the US dollar is well positioned to continue being a very, very strong currency pair relative to its peers.
Interesting. Okay, USD CAD, and you're probably looking for a pullback to get in.
I've actually raised the bar for entry.
Okay.
So before it was over here down at 1.370. So it was way over here. And I've actually moved it back to right here. So I just basically did a fib again to consider the new price where it's at right now or the new recent high. And so the 38.2% lines up right there with that 50-day moving average. So I'm not going to be as conservative as I was with the Australian dollar. I don't know if you remember, but I just wanted a deeper pullback in Aussie dollar, and I never got it in the beginning of the year, and I just missed the entire thing. So that's kind of what I'm waiting for dollar CAD. So I'm actually open to chasing price a little bit if I get a pullback up to the 50-day moving average. But I think it's a good trade. The only thing that sucks, Marco, is that like my target would have been right over here at 1.39, and we're getting pretty close there. So we've had basically a straight move in that direction without any pullback.
Yep. And you're forecasting the CAD weakness to go up, to continue for the end of this year, I'm guessing.
Yeah.
So kind of prolonged CAD weakness. Okay, nice. And so let's switch it from Forex to stocks. We have the SpaceX IPO coming in June. We don't have the exact date yet. I think it's going to be like the middle of the month, something like that. But what do you think about that IPO? So I know we talked about it briefly before, but it's supposed to be one of the biggest IPOs ever, and it could actually have an impact on the Nasdaq and the S&P as a whole. So my research is telling me that the Nasdaq and the S&P could fall, and that the SpaceX IPO will have poor returns in the upcoming 6 to 12 months. So most of the IPOs, if you do analysis of IPOs, the initial day usually the price gaps up at least 20%, and then as the smart money starts unlocking the possibility to sell, because a lot of initial investors are locked for 90 or even 180 days. As those unlocks start to happen, you get a lot of supply being sort of pushed onto the market. That's why IPOs usually underperform the index, so the S&P, in the first 12 months. And that bearish pressure, that massive selling could actually spill into the Nasdaq. So what do you think about that? That is, of course, if we get a huge IPO. So if we get like 40 or 80 billion of an IPO, if it's like 5 or 10 billion, I don't think there's going to be much of an impact. But I want to get your thoughts on that.
Yeah, it's valued at, I think, $1 trillion or more than that, way more than that.
Mhm.
So it's a very
Yep.
humongous company. I think there would be some very, in the very immediate term, some euphoria, right?
Okay.
Like you mentioned, IPOs, they tend to gap up, but then they're followed by a big, massive wick to the downside. And then from there, it starts to stabilize, and then you get some developed price action and things like that. But as far as what it will do for the Nasdaq, I think I don't know, right? So I'm not gonna make that call.
Mhm.
All I know is that I'm not gonna participate into this thing until I see a meaningful pullback. So whether the
Mhm.
pullback happens at 32,000 and it comes all the way here, or from here to here, or however it develops, or however it happens, like me participating in this, I wouldn't buy it for sure. I wouldn't buy it, and also wouldn't short it either. So
Okay.
I would wait for a considerable pullback, in my personal
Mhm.
opinion. I just think
Mhm.
there's nothing to be done here. Like I missed it, or most people missed it, I would assume. And if you're participating up here, you got to really be careful.
Yep. I do agree with you. So the trade that I'm seeing, a possible trade, but that's only for like expert traders, is possibly a scalp sell on the NAS or on the S&P, because so you could get a lot of capital going out of the tech stocks into SpaceX, which will then mean that you could get the NAS or the S&P to drop just a little bit. And what's an even better potential trade is Tesla. So scalping Tesla on the short side could be a meaningful trade, because the Elon Musk premium that Tesla has, if you compare Tesla to other car companies, Tesla is drastically overvalued. So that huge amount of premium may flow out of Tesla and into SpaceX, because SpaceX is a much better bet if you want to long Elon Musk, if you want to be long
Right.
like the person.
Exactly. Because you're actually getting like multiple companies in one too, right? That's another
Yep.
thing that's very attractive to investors.
Yep. And also one more cool thing with the website that I mentioned before. So let me put up my screen. Hyperliquid. You can actually track. Let's go to Hyperliquid. You can actually track IPO pricing before the IPO actually happens. So we have this SpaceX against USDC, and so the current forecasted price for the IPO is around 198, I'm guessing, dollars per share. And there was an IPO recently, I think it's Cerebral, I think this one, and the Hyperliquid exchange pretty much predicted the exact price, or close to the exact price where the IPO opened when trading on the actual stock exchange. So it's pretty cool that now you can actually bet on pre-IPO pricing, and you can get a rough idea of what the price will be when the stock goes live.
Yeah, very interesting. Are you looking to like trade the IPO or pre-IPO pricing on Hyperliquid?
No, I don't have any capital in Hyperliquid. So to be honest, for my personal trading, I'm focusing on the things that I can trade through regulated brokers and prop firms in Darwinex, because again, the prop firms and Darwinex, they give me a massive amount of leverage. So if I just go in with my personal account, first, I don't want to put a lot of money into Hyperliquid because it's crypto.
Sure.
So
Yeah.
you never know what can happen. But I'm very much limited in terms of what I can trade. It has to be tradable on a prop firm, but it's still interesting to discuss. And the SpaceX IPO could have a bigger impact on Tesla. And you can trade Tesla on FTMO, on DNA funded, on regulated brokers as well. So Tesla is a very tradable company, and a nice scalp short is a pretty interesting idea. So that's something I'm looking into.
Yeah. Ace says that the rug pull is going to be epic.
Yeah, I mean, yeah, Alan and I talked about it in the last stream, I believe. Like, why would you have an IPO? The main reason is to dump the bag on the retail. Because if you have a lot of big players, a lot of big whales that want to invest in your company, you don't need an IPO to do it. You can get investors and investments without an IPO. So the IPO is the final stage of the company. That's where the smart money dumps on the retail. That's the whole purpose for an IPO, in my opinion. But again, I'm just a guy on the internet and I mostly trade Forex. So
it's a wealth transfer period. Shabab says, what's the put call ratio on gold? Yeah, I wanted to touch on gold here too, Marco, before I go ahead and pivot out here, because I have been increasingly interested in gold because it's getting to my levels there. Let me pull up the gold chart real quick here, see where it's doing today. 4,400 is that level that I've been eyeing here for a while. I'm going to go to the weekly chart, but essentially this right here, right now, there is real risk, because if this level fails, right, if you continue to have higher yields, higher inflation, all that good stuff, which is actually contradictory to my dollar bullishness idea. So keep that in mind. This can continue to fall over, and I think that the fall could be actually quite violent. So let's look at gold here, right? It's at that level of support that I've looked at before. He requested that I look at the put to call ratio, and right now you're seeing some very, very high call volume on gold right now on GLD shares. So yeah, to me that's a little bit bearish, right? Especially if you get more extreme over here. You usually want to take the contrarian of this. And so, you know, my thought process is if you get a break below this level here, then you could fall even further. Now, longer term, right? Or because I'm not in a trade, I can say this, but I would say that's even better because I can get a better price, right? For the long term. But yeah, that's just my thoughts there on gold. The performance on gold, right? If you were to get a rally from here, you would need to see an end to the war. You would need to see yields lower, specifically in the US, the 10-year, which you're seeing that actually today happening. And you would see rate cut odds shifting to a more, right now we're priced in very hawkish, I would say, to a more restrictive, hold steady, or even dovish stance. So that's kind of my thought process there.
And so net, you're looking to pick up some gold a bit lower, or would you even look to sell? Because I know Nick is looking for sell setups.
Yeah, I would wait for it. It really depends on the scenario. I'm looking to pick it up here. Like this level, I really like. I've been eyeing this level for a while. I think this would be a good first attempt to go long gold. Keyword attempt. Risk defined, stop loss right below here, and then trade it to the upside. Now, granted, I would need to see a specific scenario. I would need to see, like I said, the end to the war, yields starting to fall a little bit there, and the edge finder printing a bullish reading on gold. Right now, it's -2 in the neutral camp, so it's not the best reading at all. So again, that kind of gives me that hesitation factor. Now, if you were to get a breakdown below, then perfect. I wouldn't short it on the way down, Marco, me personally, but I would just rather wait for buyers to go ahead and step in. You see kind of a V-bottom recovery and then trade it from there, alongside a bullish confirmation on the edge finder. Edge finder, where is the edge finder score history? I think I have to click that. There you go. We're going to go to gold. I'm going to be very patient, and I'm going to stay on the long side of gold there, because what is going on here? Got it. Let me show this one more time before I go ahead and pivot out here. The edge finder has been very successful at flagging bullish trends in gold and it being correct. So I just want to be on that side of the trade. So that's kind of what I'm going to be waiting for. Again, so either buy here if you get the bullish confirmation, and if you get yields into the war, inflation story starts to recover a little bit there, or you get a break below and you get a deeper pullback, and then you get some kind of a V-bottom recovery where buyers step in, and then the trade looks a little bit more obvious.
For me, I'm still in the long position. I'm still going to hold it for now. I think this is a pretty good level, and we're touching the 200 EMA, so it's now or never. One thing I'm worried, though, is this another sort of start of a range-bound cycle, because we know that gold is active for 2 to 3 years, and then it goes flat for 5 years. Like, it can stay flat, it can stay range-bound, it can stay super boring with zero edge, with zero trend for years. Is this that time? Again, we'll see. I think it's worth taking a stab long. But gold can become boring, and that's not something you want to get stuck into. So personally, I thought there was going to be a bit of a bullish reaction already. So because it's selling off, because it's not following equities anymore, we know that the S&P and the Nasdaq are doing pretty well. Gold is kind of staying range bound and even selling off. So that's not the greatest sign when it comes to relative strength. But yeah, I'm going to hold my long position, and I wish you good luck on your potential buy limit if you're going to have one at the bottom of the range.
Yeah, and that's very possible too. They just get some gold stagnates here for a little bit, and that's why on this channel that we don't trade with just purely technicals, right? We need to have a very specific story behind it, and obviously the tools that we use, the Edge Finder there. And by the way, go ahead and get yourself a copy there. I think the old price is still in right now. I think they're going to update the new price very soon, so they're going to raise the prices there on the Edge Finder. So definitely go ahead and cop that before that happens. But yeah, that's why on this channel we definitely go ahead and consider both the fundamentals and the technicals. And right now the technicals look fantastic, but the fundamentals not so much. And so that's why I hesitate right now for a little bit. But again, thank you, Marco, for the lovely conversation, man. I really appreciate it, and we'll talk tomorrow.
No worries. Thank you as well. And we will see each other tomorrow.
All right, man. Take it easy. Bye-bye.
Yep. Goodbye. Giveaway time. So if you guys want to participate in the DNA funded giveaway, here is the procedure. First, you need to join the free A1 Discord. So in the comment section of the stream, you will find the form to join the free A1 Discord. And then in the Discord, you need to find the channel called Giveaways. Okay. In that channel, you will have another jot form. Fill that one out, and you will get entered into the giveaway. It's going to be a 10K one-phase DNA funded account. So let me show you. DNA funded. Okay. And yeah, that's about it. Enter the giveaway, and your name will be here in the Wheel of Names. I have also a discount code, which is A1 Live, and that gets you 25% off any DNA funded challenge. Okay, so code A1 Live is 25% off any DNA funded challenge. This is my personal DNA funded account, 25K two-phase. I'm down $477. So that's like minus 2%, I believe. Yeah, exactly 2%. Current equity struggling to break out of break even. Yeah, struggling to go into profit, but hey, it is what it is. We will see what happens. I'm just going to keep on executing. As far as my experience with this prop firm, I've had a great experience so far. I didn't have any issues. There's a big broker behind the company, and they're using TradeLocker software, which in my opinion is the best software for trade execution for retail traders. So A1 Live is 25% off. Let's get on with the regularly scheduled program. Watchlist time. Gold. I have that buy position. It's underwater, so it's in the red, which is not the best thing to see, but it's part of the game. So I'm going to keep on holding it. We are now at a crucial level of support, as Alan showed you. So this is a crucial level of support. You also have the 200 EMA. I can put it up here. So the 200. Yeah, we are rejecting right off of the 200 EMA. The problem is we are retesting it again. So we tested it on the 23rd of March, and now we're testing it again. So if we get a bounce, that will be bullish. If we get a break through it and the close below it, well, that's a bad story. And at that point, I will most likely get taken out of my position. I have the Nikkei and I have the Nasdaq on the watch list as well. I'm looking to buy the indices, the indexes. We're not getting a pullback yet. I think we will get a pullback pretty soon. Of course, I would love to have the Edge Finder confirmation to go with that. So I would need, of course, a bullish print on the Edge Finder to take a Nasdaq or a Nikkei long. Let's check it out. Nikkei up. It needs to be in capital. Neutral as well. This is not really good, but once we get a pullback and we get a rejection, the reading may flip to bullish. So I'm gonna keep patient on that, or stay patient on that. As far as all of the other instruments go, gold I'm in. For indices, I'm looking, of course, at the Nikkei and the Nasdaq. For crypto, I'm staying away from crypto. I think crypto is looking very bearish. I think the relative strength in crypto is not there. You would expect for Bitcoin to follow the Nasdaq. You would expect for the uptrend to follow the uptrend we had on the Nasdaq. See, it didn't happen. That's a very bearish sign. So I'm staying away from crypto. There's a lack of narrative. It's super boring right now. It's not the cool thing to buy. The cool thing to buy right now is artificial intelligence. Everyone is talking about artificial intelligence. Also, let me check the semiconductors. So SMH, semiconductor ETF. It's pulling back. This is the leader, okay? This is the leader of everything right now. So semiconductors, just a massive explosion leading the Nasdaq. So if this craps out, if this pulls back, if this has a massive correction, everything will have a massive correction in the world of stocks. So we talked about crypto, oil. You know my view on oil. I don't want to touch oil right now because it's impacted by geopolitics. You would need to know what Trump is thinking. You would need to know what Iran is thinking. Right now, it's a stalemate. There's no improvement. There's a lot of back and forth. There's a lot of bullish and a lot of bearish articles on Financial Juice. But if you really go through the headlines, you would see that there is no N-word. And the N-word is nuclear. So Iran is still not talking about any of the nuclear stuff. They still don't want to move the uranium out of the country. They still don't want to stop enriching uranium. So unless they start mentioning the N-word, there's going to be no deal. It's like that. So oil stays elevated. Inflation probably goes higher. Equities, I don't know. Equities aren't impacted that much by the crisis in the Middle East. So equities could keep on raging higher as long as the biggest names in the AI space keep getting good earnings. As long as Nvidia, for example, keeps beating earnings, I think the Nasdaq can go up. Absolutely. Let's do the giveaway. Today is the 28th of May. So let me grab all of the names. 28th of May. Okay. Got the names. Let's copy those. Go to the wheel. Paste and spin. Okay. Alice. Yeah, Alice A, you are the winner. Congrats. And I have your contact information. So after my segment ends, I will send you the code for a free 10K one-phase account. I do want to repeat, if you guys are looking to get funded, take a look at DNA Funded. The code A1Live gets you 25% off any DNA funded challenge. Okay? So, yeah. Nukes in Paris. Retail traders really think drawing random lines makes them institutional. Yeah, I know. Technical analysis is not the holy grail. It's not going to save you. You need to diversify your edge. You need to diversify your trading decisions. You need to look at multiple different things. So fundamentals, technicals, sentiment, seasonality, central banks, this, that, blah, blah, blah. I still have 2 more minutes. So let's finish up. And by the way, don't go anywhere after my segment because you have James coming on after me. So we covered metals. I'm not looking at silver. I'm not looking at copper or platinum. They are boring right now. Marco, you trade like someone who learned from TikTok comments. Well, that's exactly how I learned to trade. So you guessed it. I don't want to touch the metals right now except my position on gold. Okay. We covered gold. We covered the indices. We covered crypto. We covered oil. The only thing that's left is Forex. Forex right now, I don't know. Whoa, what is happening here? So looks like we're getting a bullish move on EU. I'm glad I got out of this trade. So by the way, this is a closed trade. So let's check out financial juice. Are we getting anything here? We're getting issues with my internet or with the website. So we're not getting anything. I'm seeing a bit of bullishness here. So probably the DXY is selling off a bit. Yeah, DXY seems to be selling off. Interesting. I'm not exactly sure why. It seems like some news hit, but I don't know. So anyway, a summary on Forex positions. At the moment, I don't have anything on the radar. I'm looking at things. I'm researching currencies. Buying the dollar seemed like a good plan. Has it mostly been priced in by now? Possibly. So I'm going to need to do a bit more digging. I'm going to need to find a different currency to buy or sell. The pound, I think, is still pretty weak. So let's check out the pound Aussie. GBP AUD. I know that was my favorite thing to sell. Still looks massively bearish. And I believe the fundamentals are still bearish as well. But yeah, I'm going to do some digging. If I get anything interesting, I will update you in the A1 Discord. That's it for my segment. Thank you very much for watching. You have James coming on after me. We will see each other tomorrow, where I will have another giveaway for you. So that's it. See you. Goodbye.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Hello, ladies and gentlemen. We have just got an announcement of a deal. I know this is very small, but I print screened it. So US and Iran reach a deal, but it needs Trump's approval. So on the back of this, we've seen equities up. We've had the Nikkei up, US 500, Nasdaq, so on and so on. Risk on news. We've got oil down on the back of that as well, and the dollar is down too. Now, I wouldn't say this is really much of a big deal. Who cares? You know, it's one of those things. I don't care until it's finalized and it's done and it's gone through Trump and, you know, it's 100% fact. Until we've got that, it's a case of, you know, it doesn't matter until, you know, Taco Trump decides to step in and either give it the green light or not. Oil, as I said, has taken a little bit of a hit down. Not massive market movements, to be honest with you. Obviously, lower time frames, we did get a nice move, but generally speaking, this hasn't affected really anything at all. Okay. Axios is Israeli owned. I don't believe it. Okay, so how's everyone doing? Everyone good? Cut pound New Zealand yesterday. As we were discussing, I was in a short position on pound New Zealand. Caught almost all of this, not the very top, unfortunately, but I did catch a nice portion of this. Decided to liquidate it yesterday just to reduce my GBP exposure. In hindsight, I probably should have cut pound dollar and kept pound New Zealand. But the problem is pound New Zealand, I was also long on the New Zealand dollar through Australian dollar New Zealand as well. So it was just adding up on my exposure risk. So it just made sense. Pound Swiss is just consolidating. So this is exactly what I didn't want to be in on Pound Swiss. So when we were looking at this trade idea together, the main point I was making was that we don't really just want to be in a range bound trade because obviously we're paying fees. It's quite an expensive trade to hold. The only reason I'm still happy to hold this is because we are seeing positive developments. It is still moving to the downside technically, and it's in the blue. So quite happy to stay in for now. If that turns around, then yeah, I'll just cut the position. But yeah, that's it. Still in Nikkei. Not really anything going on. Unfortunately, I missed this move. I would have liked to have scaled in. I don't think I would have actually been able to get in because I would have really wanted to see it come a little bit lower, maybe about 50% into this support, previous high sort of zone. We didn't fully get there. So in reality, I don't think I actually would have gotten in, but it's nice to, it's nice to do hindsight. But anyway, that's it on my side of things. I'm pretty flat right now, but all my positions are doing quite well. So I'm a happy boy. Check Salesforce. I have no idea what the ticker is. Don't laugh at me. Salesforce. Oh, it's CRM. That's a cool ticker. Oops. Salesforce earning beat. I mean, this doesn't look impressive at all. I'm not sure what you want me to look at here. Technically speaking, it's just a range-bound market with really nothing going on in this earnings release, but maybe I'm being ignorant. I don't know. Anyway, S&P 500, unfortunately, didn't get in on this. However, it does look really nice on the H1. Obviously, got previous high. We came in, had the retest here, and now we're moving higher, obviously, on the risk on news that we just had. So looking good. Australian dollar, US dollar could be in for quite a nice short position if we can continue to see this market have a little bit of a retracement higher. Daily time frame's a little bit ugly, so it's down the H4 here. Obviously, we draw the fib from the high to the low, obviously give or take. Rejections previously off the 50% level. Unfortunately, I missed that, but we might be coming in for another opportunity within this sort of 50%, 61.8 level, and then we can continue lower. I really like it. And that's basically betting that we're going to continue to see hawkish Fed, dollar strength, and the Australian dollar unwind. We are starting to see very clear evidence that we're seeing Australian dollar unwinding, not across every market, but we are starting to see the weakness here, especially on Aussie, New Zealand, obviously, and Aussie dollar's been down as well. I'm looking to take more position on GU since it pulled back to my entry. Very nice. Just be careful, because what you don't want to do is sit here and I know I said that I don't really care about the headline because, we've still got Trump approval. But the problem is Trump could approve it. Obviously, in my opinion, it's more of a coin flip on what Trump decides to do. But if he does, and this is the end of it, the dollar's going to lose its war premium. We're going to see yields down. We're going to see gold continue higher. We're going to see inflation expectations come down. We're going to see dollar weakness as well. So if that is the case, then to be honest, I'd pivot actually short dollar rather than looking to scale into positions on dollar longs. James, I'm not hearing anything at all from Iran. I'm checking all legitimate sources, nothing yet. This could be market manipulation. I don't think it's market manipulation. I think it might be either some private sit-down situation between deal makers and, someone tipped off Axios or something like that. I don't think it's going to be a case of, it's a completely fake headline. It could be, it's happened before, but I wouldn't expect that to be the case. New Zealand dollar CAD longs. Yeah, I mean, it makes sense. Again, if we are going to see de-escalations, I think it could be a very positive trade to take. We've got the RBNZ that's pivoted hawkish. We could see oil down, obviously hand in hand with the Canadian dollar weakness as well. Even on the side of that, or despite that, the Canadian dollar economy is not looking great. So yeah, New Zealand dollar CAD longs, I do actually really like. The only reason I'm not paying attention to it is just because, as I've been saying, I just don't want that exposure to headlines through oil or the Canadian dollar. Trump asked for a few days to think about it. Let me just check. US and Iran reached an agreement on 60-day MOU to extend truce. US-Iran reached deal, but Trump's approval, as we already know, and Trump asked for a few days to think about the deal. Yeah, okay. Fine. Well, that's positive. At least he's thinking about it, and it's not just a flat no. Progress. So this could be, I'm not saying it is yet. Again, we'd need to see what actually happens, but this could be a generational time to buy gold. So what we've had, and this is actually quite rare, it's not a common occurrence that the gold comes down to its 200 moving average on the daily time frame. So if we look and zoom out, the last time, obviously not accounting for this previous time, but the last time this happened was let's say back over here. So when was this? October in 2023. So if you obviously it wouldn't have been a great entry, but hypothetically, in a perfect world, if you managed to get in on the 200 moving average, you would have been laughing all the way to the bank. So it could be a similar situation where actually we sit here in a year's time and we say, wow, James called that perfectly. Of course, I'm joking, but oops, that's not what I wanted to do. But yeah, I do think, again, if we do get Trump to approve the deal and this all just goes away, we see yields down, dollar down, absolutely phenomenal opportunity in my opinion. So I would be very closely paying attention to something like that. But as I said, I think it's a little bit too early to get in. But yeah, that could be a nice little position to take gold back to all-time highs and potentially new all-time highs from there. So yeah, worth paying attention to the situation in general. What else do we have going on today? Let's check the Edge Finder. We've not done that yet. Get rid of this. So Euro Aussie. I made a YouTube video on Euro Aussie this morning. We did also discuss it yesterday. I don't even have it on my watch list. Hold on. I should probably add it. Here. So Euro Aussie is also looking great. Again, feeding into the Australian dollar unwind narrative that we could see, the crowd Australian dollar start obviously unwinding. Now we've got the RBA that's more on a hold. Euro Aussie's down at its weekly level of support. We could see a really nice mean reversion back to the upside. Weekly RSI is obviously oversold here and becoming oversold yet again. So I think technically speaking, it's looking really good. But personally, I would just need to see if that's actually, it's the H1, never mind. I thought that was the H4. So what I'd need to see here is a push, break these highs, create a new high or a higher high, pull back, moving averages cross, and then we could enter on this pullback and continuation higher. That's the game plan for me at the moment. But yeah, we'll see how this one goes. It's not ready yet, in my opinion. What else do we have going on? Euro yen. I don't really have any interest in yen at the moment, just because actually we can take a look at dollar yen, because last time we looked at that one, it was getting very close to 160. I've just realized half my head's off the screen. My apologies. You can feel free to let me know when that happens, please. So yeah, MOF, dollar yen is getting close to 160, which is obviously the MOF sweet spot, which is where we can typically expect sort of the zone for interventions. Last couple of times we hit 160, which completely failed to hold above, and we get these sort of interventions. So I've got no reason to believe it's going to be any different. I did previously think we would break above 160. I thought this might have been just a very obvious spot, but lo and behold, it pretty much happened. So yeah, we'll see what goes on there, but I don't really have any interest in taking positions. Trader, that's a long name. Trader something, man. Hello to you too. It's not good. Struggle to read sometimes. So when you guys have complicated names, not easy. Australian dollar is getting a bearish reading. Canadian dollar is bearish. Copper is bearish. Dollar Swiss. Hold on. Also, just noticed oil's getting a bearish reading as well. So if the Edge Finder is giving oil a bearish reading fundamentally, and we are going to get these peace talks. I don't know why. Hold on, let me pull up oil. Not peace talk, sorry. We are going to get this peace deal come through. It could be really, really beneficial to look for a break of this support level. Obviously, it's not really perfect, but sort of within these lows, if we can get a break below, it could be a really nice momentum trade. Just sell on the break. Obviously, your own strategy applied and so on and so on. But something maybe, if you get the break, some sort of retest, fib from low to high, 50% retracement, and then a continuation lower back towards the pre-war oil price, I think could be, again, a really, really nice trade. So if we do get the peace deal, it would be a case of the markets are going to move quick. They're going to reprice quickly as well. So you would have to be very quick on the trigger finger. But if you can navigate it, I think it would be, very, very beneficial for your wallet. What else do we have? Pound New Zealand. So as I said, I was already short pound New Zealand. I did book profits just to manage my exposure limits. But I wouldn't mind getting back in, especially if my pound dollar trade is going to get stopped out. So the annoying thing is I cut it a little bit too early. I was very, very sure we were going to start reversing because, this happened on, what day was it yesterday? Wednesday morning or, evening, whatever time zone you're in. And all day, this market just rallied lower, really. Normally, you don't get a multi-day rally with no pullbacks unless there is something, really, really big going on, especially like the S&P, for example. But normally on something like pound New Zealand, you don't really get that without having some sort of correction. So I was thinking, we are going to get to pull back. I can just look to re-enter, maybe with a slightly smaller size again, just to manage the exposure and then continue lower. But we just haven't had that. This has just continued to run. Which is a little bit unfortunate because, in theory, hindsight again, could have just held and would have been very happy, but money was made, so I can't be that annoyed about it, I suppose. You're amazing. You gave me the idea for gold long. Did I? I don't remember giving any ideas for gold long, but I'll take credit. You're welcome. Gold and silver sell, oil easy. Bashi, I've got no idea what that sentence said. Gold ain't going up. War over isn't enough to send gold up. Inflation's still a concern. I would disagree. I think, inflation isn't magically going to just fall because we've got inflation coming. Just because the peace deal is there. We've got the optimism, and what you've got to consider is, let's say this is the Strait of Hormuz. This has been completely blocked. And, there's obviously been no ships coming through. So when it reopens, we are going to start getting these ships coming through. But the problem is they're not quick. It's not a case of they're just going to suddenly all arrive around the globe and everyone's happy and everyone's got oil again and energy prices come down. Everything's back to normal. It's going to take, a couple of weeks, I would imagine. I don't know the exact details. I'm not an oil specific guy. But it is going to take a while for obviously oil to sort of normalize and inflation to come back down. But I wouldn't expect this to be, inflation is going to stay elevated and maybe even go higher. I just do not see a world where that's the case. So I think the optimism around that is enough to drive yields down. Central banks can go back to maybe not their original stances quickly, but I would imagine that the hikes and again, yields will come down and things. So I think this is pretty much what gold needed. And again, it might not be a very, very quick situation, but I do think this is now the opportunity where gold can start getting some support. But James, last year gold rally was different. It was dovish Fed and rate cuts. Yeah, Ray, I'm not saying that we're going to see gold just parabolic like what we saw over here. But what I'm saying is this bearish momentum, the pressure that we've seen on gold is going to come to an end. So we could very likely see something like this. We could even see a very quick repricing on gold, then a pullback, and then a bit of a slower come to the upside. So when I'm saying all of this, I do not mean we're going to start seeing 6,000 in gold by next week, but I do think that this is it's enough for gold to be supported. Donald T will probably be on his next shopping spree under the gold long. Yeah, that's another thing. The insider trading is nuts. I watched a YouTube video about it the other day. Actually, I think it might have been CoffeeZilla. And another one as well. I watched two. I can't remember the other one. But yeah, it's ridiculous. It was like a Nokia trade or something he did. He's done, what was it, 7,000 or 3,000 trades or some, it doesn't really matter. He's done thousands of trades, I think just this year. And it averages to about 44 trades per day. Again, I think, don't quote me literally, but it was within that sort of range. And it's just crazy. I scalp on 2-minute timeframes on the equity and indice markets trading futures. The most trades I've had this year doing that was 15. It would take me serious effort to try and even get towards 20, let alone 40 or 50. It's nuts. So I don't know what his team's doing or what he's doing, unless he's just sat there on TradingView spamming buy and sell all day. Who knows? Anyone got friends part of the negotiation team? I used to have a friend. Well, no, let me rephrase that. I have a friend that has a friend, or used to have a friend in OPEC. So that was quite beneficial, but they're no longer there. So lost my lost my alpha, but it is what it is. I'm not really an oil trader anyway, so it wasn't that beneficial for me. Pound is still getting a bearish reading. That's obviously a given. If you've been keeping up to date with my content, you will know that's definitely not a surprise. Pound Swiss is bearish. We're already in Pound Swiss, CAD Swiss, and Pound New Zealand. But yeah, there's nothing really new to cover. As I said earlier, we are seeing yen getting a bullish. Yen pairs getting a bullish reading now. Euro yen, Swiss yen, New Zealand yen. I just think it's a little bit too late. So if you remember what I was saying, when we were getting these yen pairs reading bearish, I was saying that I would rather use the edge finder more as a timing tool because I don't want to go short, but I also didn't really feel like going long at the time. And it was somewhere around this point, actually. I think it was quite well timed. But yeah, I think now dollar yen is getting really close to 160. It's just not worth it. It's more a case of, okay, well, you might get a couple of points or a couple of pips, but generally speaking, I think there's better opportunities. James, do you agree markets are random? No, not at all. I think there is a reason for every single thing that happens in the markets. I don't believe in randomness. I don't think random exists. If you when you give a computer a function to do a random computation, it's not random. That's why Cloudflare have the lava lamps, I think it is, because that's like the best they can get towards random. There is no such thing as a random. You've got noise, sure, you've got corporate transactions, you've got algos, you've got lots of stuff going on, but it's not random. That's all happening for reasons, whether it's transferring funds or execution algos trying to get the best prices, all sorts of stuff. Random walk. I've got no idea what you mean, Ray Beast, by random walk. Maybe I'm missing something, but I'm not sure what that term is. Okay, Bitcoin. So what's going on? Just reset. Bitcoin is coming back down. So we've been watching Bitcoin on and off over the past couple of weeks. Obviously, we were initially looking at this weekly support level. We were then looking at this range that was formed here on the daily and weekly time frame. Then we've been paying attention to this 200 moving average on the daily. My base case, or what I was saying at the time, was that I would imagine we've got two ideas here. Either we completely reject, we come back and revisit these previous highs and then continue higher. That's still a possibility. Or we just continue higher from there, which obviously hasn't happened. So now it's a case, are you a bull or a bear on Bitcoin? If you're bearish, I would imagine you're probably looking towards 60 or 50K on Bitcoin. If not, and you're more bullish, either you'd be looking for, a revisit of these highs and a continuation higher, so break and retest, or maybe another revisit to support and then a continue higher. Obviously, I know that's a buy or sell situation. People don't like that, but I'm not a Bitcoin guy, and that's the best I can give you. So take it or leave it. Jeremy, good to see you. I'm glad you're back. Although I am coming towards the end of my segment. Bitcoin story isn't there. Yeah, I mean, I've got no idea. Bitcoin, yeah, it's not something I really care too much about. It's one of those markets, actually, it could disappear tomorrow. I probably wouldn't notice until I came on stream and tried to look at it. Am I a programming guy? No, not really. I know like the basics. I used to be quite into it when I was younger, but no, I was not, never studied it, never really built anything. It was more just a case of I enjoyed making like journaling or notepads and things. But that was when I was like 14, 15. So yeah, not intelligent there. Okay, so I think we've looked at everything. Copper is getting a bearish reading, as we said, but I do still quite like the idea of being a buyer of copper. So we do actually have a signal open for copper. I cut my position because I'll be completely honest with you. The position size was nuts. Well, let me rephrase. I wasn't nuts. It was way bigger than I thought. So I've never swing traded futures. I've been trading futures basically since the start of the year, but I've never swing traded futures. I put 3 contracts on micro copper, so MHG1. I checked the position when it was like here, and I was up a significant amount of money. Well, again, more than I would have expected. And I was like, oh crap, okay, I need to get out of that position. Because stupidly, I just didn't. I guess I was just a bit sleepy that day or something. But anyway, I do still like the idea of being a buyer of copper. So I think maybe if you're more conservative, wait for the edge finder to flip neutral or bullish. But on a technical side and on a sort of use case side of copper, I do think it's still a fantastic long. So previous high on the left, we've come back down, retested, we came up a little bit, came back down, retested the 50% retracement, and now we're having a really nice bullish daily candle. So I think copper could be a fantastic position to take, especially if we are going to start seeing metals outperform again on the back of the potential peace deal. Oh, that was a lot of words. I felt like I didn't breathe through that whole segment. Planning to see AU yields fall so I could buy Euro Aussie. Yes, Sluggy. I'm not sure if you saw, I put a video about Euro Aussie this morning. But yeah, it's lining up, but I just don't think it's there. For example, COT position, actually, we can look on the Edge Finder. Although the Edge Finder, I'm not sure what COT they actually use. I've never asked. I typically like to use leveraged funds, but anyway, we'll check what the Edge Finder is saying. So Australian dollar. Yeah, it's still elevating. Actually, we did see inflow on the previous release. Not a huge amount, but we did see net positioning increase a little bit. So again, that's just a little bit of a sign that it's not quite there. So although I always say I don't really care about sentiment, whether it's retail or COT, when I'm building a longer term idea, like obviously Euro Aussie, I'm taking that on the weekly time frame, I do need to start paying attention to like everything, layering it all on, having a holistic view of what's going on. And then obviously we look at the euro, which has had a decrease in net position. So it's just these little things that just aren't quite right for me to be buying Euro Aussie at this time. I think longer term, so over the next couple of weeks, it could be great. But yeah, I'm just going to wait on that one for a little bit. Hi James, Ian, good to see you. EUR GBP, I think it will continue higher or just a retracement. Let's see. I don't really have any personal research on euro pound actually. Excuse me. I think that this can continue higher, and that's more just playing on my bearish sterling idea. However, to back that up, we are seeing the GBP getting a bearish reading fundamentally here, which is here. Here, there we go. Bearish reading of -7. So although maybe the euro isn't the most bullish, although we are seeing Euro Aussie and Euro Yen getting bullish reading, I think the relative strength between the euro and between the pound is enough for it to drag higher. It might not be a consistent rally to the upside, but I do think the overall drift, at least, in my opinion, should be bullish, yeah. Retail is hell long copper. Are they? James, who's better, Jim Simons or Ken? Jim, without a doubt, I would say. I mean, his fund, I'm not sure off the top of my head exactly what his returns are, but I know they're outrageous, especially for a very, very large fund. It's crazy. Obviously, the more capital you get, the harder it is to make alpha. Obviously, I'm not talking about retail levels of having millions. I'm talking about the level when you get to hundreds of millions to billions. It becomes very, very difficult. So the fact that he is doing the way or operating the way he's operating is mind blowing. I'm still in AUD CAD long since yields didn't break. I've not even checked that market. Let's see. Fair enough. I mean, it depends where your entry was, but I would imagine you're probably in the green if you waited for a pullback. So fair play, Sluggy. I think it's a reasonable trade, especially again if we do get that peace deal. I think this market probably could run higher. Although I would imagine it'd be bearish for the Aussie. I do think, obviously, again, relative strength between Aussie and CAD, it should be fine. But by managing hedge fund, well, yeah, but Jim Simons doesn't run a hedge fund, does he? Like his medallion fund is closed off. I wouldn't really say they're in the same basket. Obviously, they're both in trading, I suppose, but you've got subsections. Pound Aussie, I would say is still bearish. So although I am more sitting bearish on the Australian dollar, I don't think there is a currency right now more bearish on than the pound. So again, it's a case of which one do I think is worse? Or, well, sorry, in this specific market, it's more a case of which currency is weaker rather than which is stronger, because there isn't a strong one in my opinion. So I would say the pound is weaker, but there is better opportunities. Why would you really want to be in pound Aussie when you could be in Euro Aussie or, you know, something else, you know? But yeah, I just don't really see the appeal of pound Aussie at the moment. Okay, ladies and gentlemen, I think we're going to end it there. Unless there's any final requests for charts or questions or whatever it may be, let me know. If not, I'll head off and let you guys enjoy the rest of your days. I'll give you a minute or so. Yeah, I don't think there's much else for me to discuss. As I said, we've kind of looked through the Edge Finder readings. I guess I could do another quick review of my open positions, just to see if there's any crazy changes. I would highly doubt it. Aussie New Zealand is continuing to run really nicely. Again, I would expect this to get corrected at some point, so I'm a little bit cautious, but so far it's fine. Nikkei is revisiting these previous highs, so now again it's really just a case of can we run higher from here? I would like to say so, but the Nikkei can be quite range bound and ugly at times. Pound dollar is really not doing too much, and pound Swiss is actually breaking out these lows. So if we can break the low here on pound Swiss, I think we could be in for quite a nice ride back into this low at least. So this might be, I would say, I mean, you know, worst case scenario kind of would be sort of 2R, I would imagine. That's obviously if we get down to this low and show a complete rejection from there. But yeah, we'll see about that. Palladium, I'm going to skip Palladium, my friend. It's not personal. I just don't know enough about it. I'm at the end of my segment. I don't really have anything valuable to give you on that market. So guys, have a fantastic one. Stay safe. Enjoy the rest of your days. I'll see you next week. I'm not able to come on stream tomorrow. So guys, have a good rest of your days. Stay safe and don't get margin called. Thank you for being here.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.